Trading. I'm Francine Lacqua here in Rome in political turmoil with Tom McKenzie in London.
And here are your top stories. Hike, but by how much? The ECB is set to raise rates for the first time in a decade. The question, 25 or 50 basis points. Italy's government teeters on the brink as Mario Draghi's attempt to resurrect his coalition collapses. BTP yields spike. Plus, turning on the taps, Nord Stream says gas shipments from Russia have restarted. Prices tumble. Let's take a look at the futures then. There was some optimism in the early parts of this morning on the back of the news that the gas supplies have come through from Nord Stream 1. We're still waiting to find out just to what extent those volumes are coming back. But of course, it's the Italian politics that is central, and you're seeing losses now in terms of the futures of 0.4%. Let's switch it over and see how things are playing out. It was a modestly positive day over on Wall Street. That was more of an earnings story. The FTSE 100 is currently flat as we assess the prospects of the two frontrunners now, Liz Truss and Rishi Sunak, to take over as Prime Minister. That will continue in terms of the debate as they try to win over members of the Conservative Party beyond Parliament. The FTSE 100 currently down about 0.1%. We continue, of course, to keep an eye on Italian assets. After that impassioned speech by Mario Draghi yesterday, there was a bid for Italian assets, then the sell-off after the coalition started to crumble a few hours later. Grumbles as well, of course, amongst lawmakers in Italy. The Cajon is currently down 0.4%. Over in Spain, you're seeing losses of 45 points. Let's switch it over then and see how things are playing out. We do have those Italian BTPs in focus for us because there's been a sharp sell-off on the back of the trading that started today. Yields up, of course, and the price lower on the Italian 10-year, currently at 350, so still below that 4% level that caused so much concern for ECB officials, but there's been a sharp move higher in yields, 11 basis points. Future stateside pointing a range band as things stand, euro-dollar 102. We continue to assess, of course, the impact on the single currency, depending on what happens later today from the ECB in terms of that rate hike, currently gaining 0.3%, and Brent is at 106. You are softer by 0.7%. Francine, it was remarkable, wasn't it, that impassioned speech that we saw from the Prime Minister, and then a few hours later, it all started to fall apart.
Yeah, I have to say, so we heard two speeches actually from Mario Draghi yesterday, and both were uncompromising. He said, look, you back this government or basically I'm out, and they're now in turmoil. So you had three of the key coalition partners finally not deciding to vote in that support. So look, he tried to strong-arm really its fractious coalition into line, and that failed. So what happens next? It's probably elections because he will resign today. That we know, Tom. It's very unlikely. I think it's actually impossible for the President of the Republic to do what he did last week, which was say, no, I still have confidence in you. I don't accept your resignation. So we'll see elections in October, but this, of course, has implications for the ECB, for the anti-fragmentation tools, and then, of course, a recovery fund. Remember, Italy is also due to receive a big tranche of money, about 22 billion in December, but this was on a quid pro quo if they did some of the reforms. What happens if Draghi is no longer here?
Absolutely, Francine, hitting the nail on the head in terms of that funding from the European Union, of course, but also, as you say, the complications for the European Central Bank, that important decision later today, and the details around the anti-fragmentation tool. The ECB is set to increase interest rates later today. For the first time in 11 years, markets are expecting an increase of at least 0.25%, but reports suggest the bank may go further, not for a 0.5% rise. For more, we're joined by Bloomberg's Danny Berger, who is in Frankfurt. Danny, what can we expect today then in terms of the hike? 25 or 50 basis points? What are the markets telling us?
Well, I'm glad you asked what the markets are telling us, because I certainly wouldn't have this job if I actually knew. But markets are pretty evenly split at this moment, 50% either way, about 36 basis points priced in terms of money markets. Now, the case for 50 basis points, I must say, it is a strong one. Inflation coming in at 8.6%. It's hard to justify negative rates in that type of scenario in the environment we're in. Hiking 50 basis points would get us to neutral. And you could say, look, it is a difficult time. There's still questions around energy. There's a coming recession predicted for Europe. But at 0%, that is still pretty dang accommodative. I was talking to David Cole of Julius Baer, the chief economist over there earlier about it. And he said the case for 25 is just one of credibility. The ECB and Christine Lagarde explicitly guided to 25 basis points. They might lose that credibility of guidance, but perhaps they don't need it if they want to be reactionary to the ongoing inflationary and economic situation.
Yeah, it was interesting, Danny. I also, read a really brilliant note by Citigroup saying the problem if they don't do 25 basis points and do 50 is that maybe it also puts in question their resolve with the anti-fragmentation tool. So what are we calling it? Is it the Italian anti-crisis tool, and how does that complicate things for the ECB?
Oh, Fran, I almost have to call it that, right? I'm in Frankfurt, right? I'm scared someone's going to come whisk me away from the set if I say anything different. But look, it certainly complicates things, because we see at the moment already this morning spreads widening out because of the political turmoil, because of what's happening there where you are in Rome, Francine. So if the ECB steps in now with an anti-fragmentation tool, it might look optically not great that they're stepping in and intervening when it comes to Italian politics. Of course, the other risk here is what comes afterwards. What does the Italian government look like? If it's more populist, there's someone who might not comply with some of these growth and stability requirements that we are expecting from an anti-fragmentation tool. And of course, to cap it off, it's likely to face German constitutional court. So that's another issue. Will traders test the tool if they know it's going to face some of those legal challenges?
Yeah, it's so rough actually to know what they'll do, Danny, because of course then if they put the bar so high that no one can access this anti-fragmentation tool, then you wonder what the point of it is. Danny Berger, of course, joining us from Frankfurt. She'll lead all of our special coverage of the ECB rate decision and reaction to it, and that begins at 1:15 p.m. London time right here on Bloomberg, Tom.
Okay, let's get back to the other big story, of course, of the day, which is, of course, impacting markets as well. Gas flows along the Nord Stream pipeline from Russia have resumed, but with some uncertainty surrounding the future of supplies. The EU has been asking member states to reduce their consumption.
We have to reduce our gas consumption. I know this is a big ask for the whole of the European Union, but it is necessary to protect us. Every member state should reduce the use of gas. And our second objective is we provide a safety net for all member states.
Okay, Will Kennedy, our managing editor for EMEA, covering energy and commodities, joins us on set now. How significant is it that Nord Stream 1, Will, is back online? How much uncertainty continues about just the extent to which gas flows will resume back to that 40% level that they were prior to the shutdown?
It's important to step back. In the time that it was down for maintenance, there were a lot of people who worried that the Russians wouldn't turn it back on and they'd go to zero now and for the foreseeable future. So there's some relief in the market that we're back to those 40% flows that we saw before the pipeline went down. However, as you say, that's no guarantee for the months ahead. I think there are two important things to say. One, 40% is only 40%, and it still leaves gas supplies into Europe very constrained. And two, President Putin has already signaled there may be more problems ahead. He's talking about another gas compressor on the pipeline that needs maintenance in as little as a week's time and could potentially reduce flows to 20%. There's a lot of gamesmanship there. What's certain, I think, is that this pipeline gives Putin a lot of leverage in his mind, and it would be very surprising, given the widest backdrop, that he doesn't seek to use it as we go into the crucial winter period.
Well, thank you so much. Will Kennedy there, our managing editor for EMEA, covering energy and, of course, commodities. Now, let's get into the key market drivers with the head of Amundi Institute, Monica Defend. Monica, I have so many questions, not only about Italy, but, of course, this is the first time in 10 years, 11 years, that the ECB is hiking rates. 25 or 50, is it a credibility problem if they do 50?
No, we think that our baseline still is 25 basis points, and this is really related to what they're going to announce on the anti-fragmentation tool. So the two things has to be thought together. So it's 25 and nothing really concrete on the anti-fragmentation. Vice versa, because the 50 basis point is naturally at stake now. This should come with something more on the anti-fragmentation tool, and we don't think the ECB is there yet.
Monica, let's go straight to the man of the hour, Mario Draghi, as we think he's about to resign.
Everything that we've done together during this period. In the light of the vote that was expressed last night by the Senators of the Republic, I would like to suspend the hearing because I'm going to go to the President of the Republic to express what I want to do.
Presidente, quanto tempo ritiene sia necessario?
How much time do you think will be necessary?
Mezzogiorno.
Until midday. So let's suspend the session until midday. So now this hearing is suspended and will start again at midday.
Session, it seems, until midday. That is CET, midday CET, so 11 a.m. UK time. So we did not get the resignation speech or announcement from Mario Draghi yet. We have not had it yet. That is the expectation, of course, after the breakdown of his coalition. Let's bring it back then to our guest, Monica De Fon from Amundi. Monica, what do you do with Italian assets amid this political uncertainty?
Well, starting from the fixed income, we moved to neutral, the exposure on the BTP. On the equity side, there are still some relevant and opportunity stock picking stories. So we are positioning and cherry picking basically on the equity market. So while on the fixed income, obviously, we stay on the cautious side.
Monica, I'm so confused about what just happened. So we thought that Mario Draghi would go to, of course, the lower house, tender his resignation, or say he would resign and go speak to the president. He now says he wants to speak to the president, so we assume that he's tendering his resignation. I mean, is there any conceivable way in which the president of the republic, for the second time in 2 weeks, says, Mario Draghi, I do not accept your resignation?
You never know. It might be. The problem is that there is a lot at stake. 22 billion is a lot of money that the country needs in a moment, autumn, where the economy is going to struggle. There are some structural reforms that needs to be accomplished, and then there is the budget law. So those aspects are really, really important for the country, and there is nothing that the ECB can do, right? Because the ECB can solve issues related to fundamentals, but not to self-inflicted pain. So I think that there is a call to responsibility. Then we'll see whether Mario Draghi will accept or not, because it is really difficult not having the trust of the parliament to move ahead for him.
351 now on Italian BTPs 10 years, so you're seeing a yield move of about 11, 12 basis points. What is the complexity around the anti-fragmentation tool then, Monica, that we're expecting to get more details on? What are the markets going to be looking for, and how does the political risk in Italy make it that much more challenging for the ECB?
Definitely, it is making the day for the ECB more challenging, but we think that the tool has to be structural, has to be thought as a long-term tool that is addressed to manage the country fundamentals. It cannot be spot on Italy. So it has to be a European long-term tool. So we really would like to see these two things being disentangled, because otherwise it is not going to be a powerful tool.
Monica, thank you so much, as always. Monica De Fon, head of the Amundi Institute, joining us this morning. Now, we'll have plenty more, of course, from Italy, the political crisis, the ECB set to raise rates for the first time in over a decade, but also coming up, The value of IPOs in London has fallen to the lowest since the global financial crisis. We talk to the chief executive of the London Stock Exchange next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the Open. We are 15, almost 16 minutes into the European trading day, getting a lack of direction for these markets as we wait, of course, for that 1:15 decision from the ECB. Do they go 50 basis points or do they become more conservative and go with 25 basis points? Of course, Italy and the politics of that nation muddying the waters as well for the European Central Bank. The future stateside also range-bound after some modest gains on Wall Street yesterday. Now, earlier this week, Japanese conglomerate SoftBank temporarily halted talks about publicly listing in London over the uncertainty in the UK government. That's the arm part of the business, of course. This is a further blow to Boris Johnson's vision for London as a global financial centre. Since 2016, IPOs have been losing steam in the UK, making up just 30% of total listings proceeds in Europe. Joining us now is Julia Hoggett, CEO of the London Stock Exchange. Julia, thank you very much for coming to the studio.
Thank you for having me.
And joining us. Just give us your sense of the demand in terms of publicly listed companies in the UK. Of course, we have economic financial conditions that are tightening. Rates are going up. So it's not just unique to the LSE. It's worth pointing that out. But it has been subdued this year, in the first half of this year. Do you expect this to continue? Are you seeing any pickup in momentum as we look to the second half of the year?
I think there's a distinction between the preparation activity that companies are doing to get ready to come to market and the choice they make about when they do so. The preparation piece is continuing, and we continue to have a lot of conversations, and a lot of companies are getting ready. I think the question as to when is partly a function of their advice and what they're told to do in terms of the optimal valuation. And obviously, we're seeing a complete shift in the interest rate environment. We've seen the Russia and Ukraine circumstances. There is a global reset going on, which I don't think was anticipated when people were looking at the year in December, January. And that is factoring into people's timing decisions. But that's really what it is. The other point I'd make is that total issuance is actually down 64%, whereas it's down 81% in the US. The follow-on issuance that we've had in London has always been one of its strengths. I know everybody focuses on IPOs, But for me, I always say a listing is for life and not just for Christmas. And therefore, we have to focus on the ongoing access to capital that the markets provide. And actually, that's pretty robust in the circumstances, I'd say.
Julia, good morning from the political chaos capital of Europe at the moment, Rome. But I have to say London is also, not as calm as it used to be. What does this political turmoil, as we await a new government, a new prime minister, mean for a business like London Stock Exchange?
Well, I always think of my job as something, I describe it as a five-year forward job. I was a fixed income person for many years, and therefore I still think in those terms. And we have to work on today, but we also have to prepare for tomorrow and for the years to come and the structure of our markets. Because people make long-term investments in interacting with our markets, and therefore we have to have long-term visions for what we do. And actually, that long-term vision in the UK is coalescing in a way I haven't seen in a very long time. We saw it in Mansion House last night, the night before. We've seen it with the creation of the Capital Markets Industry Task Force to pick up on Hill and Khalifa reviews and Mark Austin's review to really work on how we continue to enhance the dynamism of the UK markets. That is happening, notwithstanding the fact that we have an interregnum right now. But that commitment I see as something that is cross-party, is totally focused in the UK, and there is greater consensus than I've seen in a long time.
Because on the politics, Julia, of course, the reporting from some outlets, the FT and others, has suggested that the reason SoftBank have held back on the ARM listing in the UK is because of the political uncertainty. So that as a risk, first of all, and your reaction to that. And secondly, to what extent, how concerned are you, how disappointed are you that ARM now are considering possibly other venues?
Look, I want to win every single offering that I can do, and I also feel very strongly that there is a very compelling case for ARM to have a dual premium listing in the UK. When ARM was here before, it actually had a higher valuation than its peers elsewhere around the globe. And so it has a strong track record of being followed here, and the UK does want to have the access to these sorts of securities. So I think there is still a compelling case. But that is clearly for the company and for its shareholder to decide.
Have you and the LSE been part of that lobbying effort?
We've been working very hard. I describe the attitude I have to winning anything is that we have to be young, scrappy and hungry, to quote Lin-Manuel Miranda, and we should absolutely fight for everything that we think we have a compelling strategy to propose. And if we have a good case, we should argue for it.
So, Julia, what would that look like? What kind of, requests or advice or whatever you want to call it would you ask the next Prime Minister and Chancellor? Can London still become or still hang on to its title of the best financial capital in Europe? And what should it focus on?
I think London still is the European financial capital. If you look at capital raising, it is still the largest venue. We are the largest venue outside of Greater China and the US. That is where we aim to be, and that's where we should be. The UK has great potential. We have 2 of the top 5 universities in the world. We have a unicorn that we create once every 26 or 27 days. And so we have the great capability to start brilliant companies. What we need to really enhance is the capacity to create an environment where great companies can start here, grow here, scale here, and stay here. And we haven't necessarily always had a system that's run through the tape, I would say. And therefore, one of the reasons we're creating this Capital Markets Industry Task Force is to really focus on the dynamism of the private market ecosystem in the UK, a crossover ecosystem, and the public market ecosystem. And not just turn it to the regulators and to the government and say, please can we have this tweak and please can we have this tweak, but actually take proper ownership as the CEOs and chairmen and leaders in this industry of what it does to serve the real economy and the UK's place as a global financial centre.
Julia, on the question of equality, the vast majority of companies going public in the UK are still headed by men. Is there more that can be done by you, by the LSE, by regulators to kind of change that mix, change that dynamic and get more women, more diversity into the boardrooms of these companies that are looking to list here in the UK?
I think you'd be surprised if I didn't say, of course, there is more that we can do. I feel very passionately about this, as Francine knows. But to me, one of the key things is we have to call these elephants in the room out. The simple reality is female founders get far less access to capital at startup and scale-up stage than male founders do. But the evidence that they produce less value is not there. So we need to make sure that we're calling it out. Earlier this year, we didn't just have International Women's Day at the London Stock Exchange, we had International Women's Week. And we focused on female economic empowerment and entrepreneurship, and really pointed out those mismatches in the access to capital, and pointed out and tried to create opportunities for women to connect with sponsors and venture capitalists so that they could find the financing. And we are increasingly moving into creating venues in the private market space as well to reduce the amount of friction that it causes for people to try and find private finance. And that, I hope, also creates some degree of equality in the process. So our job is to keep talking about it, keep fighting for it, and to put our money where our mouth is.
Yeah. All right, Julie, thanks so much. We need like a whole hour on this. So we're going to get rid of the political chaos that's engulfing Europe right now and get you back on to talk about that and sustainability. The London Stock Exchange Chief Executive Officer, Julia Hoggett. Now, coming up, of course, it's decision day from the European Central Bank. The first time in 11 years, more than a decade, that we saw interest rates rise here. 25 or 50 basis point hike, that's the question. So stay with us as we continue our coverage live from Frankfurt. This is Bloomberg.
Welcome back to the Open. 26 minutes into your European trading day. Just zeroing in on a couple of individual names for you. In terms of Nokia, it was a beat in terms of their second quarter profit, beating the estimates. They're seeing growing demand for 5G gear, and they are managing, they say, to successfully navigate supply chain constraints. You're seeing as well SAP cutting their guidance in terms of profit outlook for the year. Ocado, that was a miss on first half. They are seeing a challenging environment, of course, on this cost of living crisis. Nokia up 5% on the back of that earnings beat. Stay with us, plenty more coming up, including the CEO of Givaudan. This is Bloomberg.
know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccines specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. Hike, but by how much? The ECB is set to raise rates for the first time in over a decade. The question, 25 or 50 basis points. Italy's government teeters on the brink. Mario Draghi tells lawmakers he's making his way to the Quirinale Palace for a meeting with President Mattarella. BTP yields spike. Plus, turning on the taps. Nord Stream says gas shipments from Russia have restarted and prices tumble. So, Tom, of course, we're keeping a very close eye on exactly what's going on also here in Italy at the Quirinale. This is a beautiful palace. It's not too far from here. And this is where the president of the Republic stays and lives. We were expecting a resignation speech from Mario Draghi at 8 o'clock London time. We did not get that. He said he was going to make his way to the Quirinale to then tender his resignation, we think, or there's some kind of agreement between him and the president. We don't 100% know. But despite all of this confusion, speaking to insiders close to the president, close to the prime minister, it does seem like base case is elections in October, and so Mario Draghi will probably no longer be prime minister after that.
Okay, base case is elections in October. A couple more hours of uncertainty, as you say, as we wait for that meeting, or that meeting continues between the Prime Minister, at least for now, the Prime Minister for now, and Mattarella, of course, the President. In terms of how things are playing out across these equity markets, then, we'll bring you on to the Italian equities and sectors, but frankly, it's the banking sector over in Italy that's feeling really the pain, but more broadly, the Italian index is down, the last time I looked, by about 1.4%. But broadly, across the benchmark, you're seeing losses of 0.2% as we await, of course, that important decision from the ECB. Are they going to go 50? Or are they going to be more conservative and hold to 25 basis points, as, of course, they have flagged? 1:15 is the time of that decision, followed by the press at 1:45. The DAX is down 0.2%. Here in the UK, the FTSE 100 down 0.3%. We now have two contenders for the Prime Ministership as they battle it out for the votes of parliamentary members, not parliamentary members, members of the Conservative Party across the country. In terms of your sectors, again, a little bit range-bound, as I said, more broadly across these markets, as we await that decision from the ECB. Top of your list, just gains of 1% is media, then construction materials. It's about half and half in terms of what you're seeing. Half are in the positive, in the green. The other half of the sectors, the biggest sell-off you're seeing in consumer, basic resources and utilities. But it is one stock, it is, of course, earnings season, one stock in focus for us, and it's a beat, Francine.
It is a beat. Now, the Swiss-based maker of flavors, fragrances, and cosmetics ingredients, it kind of makes you dream, doesn't it? Givaudan has reported an earnings beat for the first half. This, as the higher input costs and supply chain disruptions have created a very challenging operating environment for the sector. Now, we're delighted now to be joined by the Givaudan Chief Executive Officer. He's Gilles Andrier. Mr. Andrier, thank you so much for coming on Bloomberg TV. When you look at your input costs, and this is one of the biggest challenges, of course, not only for your company but your sectors? What are they going to look like in the next 6 months?
Good morning, Francine. Yeah, overall, we are looking at close to 10%, 9% of raw material increase for the year, in addition to energy, transportation, everything is up, obviously, for our company, but many others, I guess. And so we have made very good progress in sort of recovering those higher input costs through price increase. And so the first half, we are growing 6.2%, and 40% of this growth is driven by price increase. So we are really on a good track to recover all those increase of raw materials over this year and then the next few months in 2023. So we're on a very good track.
Gilles, any sense at all that your customers, your clients, are starting to get a little bit more wary about taking these additional costs on board? Is there any fragility there at all? And when do you expect to see these input prices coming down?
Well, the first question, essentially having a price increase conversation with our clients, and we deal with many clients around the world, is not a popular discussion to have. But at the same time, we are working in a very collaborative way to make that happen. We don't see yet sort of a translation of those increase of prices on our client side, on the retail side, into a volume decline. We don't see that being translated in our figures. So the volume actually growth is still running at a little more than 4% for the first 6 months. The outlook for the next 6 months is difficult to really read, but today we don't see any sign yet of slowdown, neither consumer sort of down trading like we had seen in the financial economic crisis of 2008. So yeah, that's what we can say today.
So Gilles, what does that mean overall for margins, not only in the next 6 months but beyond that?
So obviously, with sort of our raw materials represent about 35% of our sales. So this is a very large number, to more than 2.4 billion of sales. So you can imagine with 10% increase, this is a very large number to recover. So the goal is actually to protect the EBITDA margin in terms of absolute number, and we are really on a good track to do that. So so that's why we have a beat on the sales, thanks to price increase as well, but also a beat on the EBITDA margin, which was better than expected in the first 6 months. So going forward, we are quite confident that we can sustain a good level of margins by protecting it through price increase. That's what we can say. In terms of input costs, very difficult to read because the inflation is still running around the world, with a lot of challenges, strain on the supply chains, logistics, transport, everything. That's really the consequence of the huge rebound that we have seen in 2021, which has still some effects into 2022, but also obviously amplified by the war in Ukraine. So we don't see that coming down yet in the next 6 months to come. Maybe later, but not yet for this year.
And Gilles, you've announced cuts to marketing spending, to spending on R&D as well. Is that a short-term response, or is that more permanent? And is there a risk to growth on the back of those cuts?
No, we didn't say that we are cutting on R&D, on innovation. This is the engine of Givaudan. We spend about 10% of our sales on R&D. This is really part of the business model. Every single fragrance, every single perfume that we make or flavor, it's very specific to the brand of our client, because this is so much a driver of liking for consumers that this is something which is absolutely key to get the best and the most relevant taste and smell for the brands of our clients. That's what they are looking for, and that's what we do for them. So we never cut on basically the engine of Givaudan, which is the only way you can actually grow into the future. What we've done is to be obviously more frugal in everything that we do. We didn't go back on traveling around the world, and maybe that's a good thing also for the CO2 footprint. So yes, frugality, but no cuts on basically the engine of Givaudan.
So Gilles, when are you expecting things to get a little bit better?
That's a good question.
Easier.
So the real positive is that the positive is that we continue to see a very good volume trend. You know, we are growing more than 4% in volume in the first 6 months, with high comparables in the first 6 months of 2021. So this is very good. You know, this is something that we that testifies for, you know, also the good sort of trading of our clients around the world. It also testifies for something which is quite unique to Givaudan, which is we sell in a way to everyone. We own 25% of the whole market of F&F, fragrance and flavors in the world. So that creates hedges, you know, because we do sell fragrance and flavors with all types of clients, all types of categories. So one is down, the other one compensates, and that's what we call the natural hedges of Givaudan. So we are quite confident that even things, you know, will take time to recover, we still will navigate in this challenging environment with a sustained, you know, good growth and good financial results.
Okay, Gilles-André, Givaudan CEO, thank you as ever for joining us on the back of that first half beat for the business. Still able, of course, to maintain margins and pass on the costs to customers and seeing demand holding up. When it comes to the political crisis, though, Francine is, of course, taking the front seat in Rome. I'm just scratching my head, Francine. I'm struggling to understand how this all plays out. But certainly the investors, when you look at Italian equities, are concerned. You're seeing a drop there of almost 2%, 1.8% across Italian equities. And, of course, yields are up as well.
Yeah, so if we cut out the noise, Tom, and there's going to be a lot of haggling, you know, this fraction or this party saying I want this, or it's unclear whether Mattarella actually accepts Mr. Draghi's resignation, but we're going to elections, okay? I think that much is clear because Mario Draghi played with fire. Now, whether you're behind that or not, he was uncompromising. He's saying, I either stay in government with this coalition or I'm out, and they didn't vote for him, so he must be out. The timing, of course, doesn't do anyone any favors because of the EU funds. Given due in December and the ECB fragmentation tool, but we're looking at possible elections in October. And so the question for me now, what investors need to think about, is what kind of coalition will we get from the right? Are they Eurosceptic? Will they be able to do the reforms in place to get that 22 billion euros so badly needed from the EU Recovery Fund? And so that's probably the only question that investors and traders and people on the markets need to answer right now.
Okay, so the flavour of that coalition after those elections in October, which, as you say, now look inevitable. And, of course, how sustainable that government will be as well. Okay, coming up, we will wrap up the big tech stories from the last 24 hours as Tesla results beat and Microsoft and Google freeze hiring. Stay with us. This is Bloomberg.
About what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
A
what's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back, everyone. It's the European market open 43 minutes into European trading day, and you can see a sell-off for European assets, Italian assets in particular, because, Tom, of course, there's all of this uncertainty on the reforms on the ECB fragmentation tool, and if political Europe, of course, worries about Italy, the markets worry even more about Italy because we don't know what that means for the access to the EU funds, and we don't know what comes after this government.
Yeah, heightened uncertainty. What is it, 67 governments in the last 75 years in Italy. So just underscoring just the political risk there in that country over the longer term as well.
Never boring.
Right. Never boring. So, okay, from the macro and the politics to the tech sector now, because there have been some significant developments there as well. Tesla beat with its profit estimates in its latest quarter, but the EV maker also sold 75% of its Bitcoin stake. Microsoft and Google, well, they appear to have joined the hiring freeze amid inflation and recession concerns, and the negative sentiment is extending to China. ByteDance's valuation, the owner, of course, of TikTok, has fallen well below $300 billion, down at least 25% from last year after investors cashed out of the social media giant with its IPO now on ice. Joining me to take us through it all is Bloomberg Quick Take's Alex Webb. Alex, let's start then with Tesla and Elon Musk. What jumped out at you?
The numbers were pretty good. They're pretty in line. The Bitcoin thing is interesting because actually, while most of the numbers were in line, the big number that was significantly affected by this Bitcoin thing was their cash position. And their cash position was actually a little bit short of what the market had expected, but had been boosted to the tune of about $900 million by selling down some of that Bitcoin stake. So without that, it might have been a slightly different position on cash. And it clearly speaks to the pace at which they're investing in these new production facilities in Berlin and in Texas.
So, Alex, does this just make sense money-wise, or they believe less in Bitcoin? Like, what's the story there?
I mean, I think the Bitcoin, I don't really know what their thinking is on Bitcoin, as, you know, it was a very important signal early on when they bought it for Bitcoin trading as a whole. I tend to think that it is about boosting that cash position, so things look a little bit rosier for investors. Is it a good trade? Well, presumably it's below where they bought it, so on that basis, probably not. But it kind of been inferred as sort of optimism about Bitcoin as a whole, that if Elon really was that sort of hold on for dear life, then he'd be hanging on to it.
Yeah, he's not a hodler, but he did make a point saying, like, don't read too much into this move.
Exactly, I think it's to do with
as you said, yeah. When it comes to Microsoft then, and the other tech companies, Google as well, Alphabet, slowing hiring, or at least putting a cap on hiring, this is a trend that we're starting to see now across the tech space.
Yes, and look, there are different reasons for all of these companies. I think, you know, the likes of Google and Facebook are going to be more hit by pullback from advertising. The first thing that gets hit on the whole in economic slowdowns is companies trim their marketing budgets. So these guys are ad tech companies. They will feel the pain a little bit more keenly than others. But I suppose it more reflects that these companies maybe don't see the expansion opportunities that they might have done before. So it's not necessarily they're going to be hurt per se, certainly in the case of Microsoft, but that they may not, you know, they're usually hiring because they say, well, let's kind of exploit this space a little bit. There's an opportunity there. Perhaps some of those opportunities aren't quite as great as they were.
So, Alex, what exactly is going on with ByteDance?
Well, ByteDance is expected to have an IPO before too long. Presumably then there are people selling their stakes in the private markets because they're not going to be getting that influx of cash from an IPO, and those private trades have seen a reduction in the valuation. The most recently announced valuation had been when Tiger Global came in, and it was valued the company at $460 billion. Recent trades have seen it below $300 billion. Now, perhaps this oughtn't be a massive surprise when you look at the general direction in which social media stocks have been going. Facebook or Meta might have recovered a little bit recently, but on the whole, over the past year or so, they've been going down. People are not spending as much time online as they were deep in the lockdowns, and clearly ByteDance, the parent company of TikTok, is not immune to that.
Okay, Alex Webb of Bloomberg Quick Take, wrapping up some of the big tech stories of the day. Thank you very much indeed. Coming up, it is, of course, decision day in Frankfurt. That's as the ECB gears up for what would be its first hike in 11 years. But will the Governing Council go to 25, or will they go big and push for 50? We've got more on that story next. This is Bloomberg.
the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
However you get your news.
This is Bloomberg Daybreak with Link.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to the Open. 51 minutes into the European trading day. Losses of 0.3% across the benchmark, but the pain is being felt most acutely in Italy. The FTSE 100, the FTSE MIB, I should say, down 2% now. And it's the banking sector that is really under pressure, down more than 4%. Yields up on BTPs, currently around 354. Francine is on the ground following the twists and turns and the uncertainty of the politics of Italy.
I am, Tom, and I have to say it's extremely messy. No one was really expecting what happened yesterday. First, a support for Mario Draghi, and then three of his main coalition partners saying that they will no longer support, or actually that they decided not to vote. Now, what this means is huge implications for, of course, the elections. Looks like we're going to have elections in October. Mario Draghi decided not to announce to the lower chamber that he would resign. Instead, he's gone to the Quirinale Palace, where the President of the Republic lives, to actually speak with him before then going back to the lower house and telling us what his plan is.
And so the Italian politics to the yield spread, currently around 220 or so in terms of the spread between BTPs and German bunds. And that takes us, of course, to the challenges of the ECB as well, becoming ever more acute. It is decision day at the ECB. The bank is expected to raise interest rates for the first time in 11 years as gas supply concerns and political turmoil in Italy, of course, weigh on the minds of the Governing Council. But will they opt for an outsized hike? For more, we are joined by Bloomberg's Danny Berger on the ground in Frankfurt. Danny, What is your assessment as we lead up to this decision, 1:15?
Well, look, if we were to take our cues from the markets, it is a coin toss. 50-50% odds of going 50 basis points or 25 basis points. Now, the argument for 50, yes, the guidance has been for 25, but inflation is coming in Europe at 8.6%. It is hard to justify such an accommodative stance of negative interest rates if that's the case. And 50 basis points would get us back to neutral. And look, even neutral is still pretty dang accommodative if we're worried about the economy, if we're worried about gas, if we're worried about Italian elections. And I was speaking to David Cole of Julius Baer earlier, who said the only argument for 25 is this issue of credibility around forward guidance. The ECB and Madame Lagarde have been very, very explicit in saying it would be 25. So they risk losing that credibility. But again, Cole says perhaps they don't need it. Perhaps forward guidance is not the way forward. Go back to the orthodoxy of moving as the data suggests.
Yeah, the problem, Danny, is that if markets can't believe, if you telegraph, look, we're going to hike by 25 basis points, and then you don't do 25 basis points, maybe the markets then will start questioning this anti-fragmentation tool.
Yeah, that's an excellent point, Francine. It is all around credibility. And the credibility of the anti-fragmentation tool is threatened not just by that, it's also threatened, as you know very well, and you've been speaking about all morning, Francine, Italian politics. If the ECB needs to step in, use this tool, if it's politics that's widening out spreads, that's not optically a great look. This is supposed to be something to keep spreads in check. It's not supposed to be intervening in individual governments. At the same time, it could also face threats from the German court system. It's likely to be challenged there. We've seen OMT, other bond buying programs, indeed get through the court system. But will it be the same? Will traders test it up until then? So a lot of threats in the fore for this anti-fragmentation tool. I'd say behind 25, 50 basis points, this really is the most important thing we're likely to get out of the meeting today.
Yeah, indeed. More clarity, of course, is expected, and we'll see if it's enough for investors. So that's the Italian political risk as well, and the implications for the anti-frag tool. What about gas supplies then? Nord Stream 1 coming back online. Can the ECB sit back and relax, at least on this topic, Danny?
Well, not completely, Tom. Look, it definitely will be a sigh of relief that at least is flowing. There's some movement there. If gas was completely shut off, that would be definitely a different story for the ECB, who now has to reckon with a quicker and perhaps more forceful recession. Now the calculation will be to wait and see to what extent gas is flowing back. We know the data says 40%. That is still pretty low. That's still likely to see some demand curbs put in place. But at least for now, the fact that it is flowing is likely going to push the ECB slightly in the direction of 50 basis points.
Okay, Bloomberg's Danny Berger on the ground in Frankfurt for us, and we will, of course, have special coverage. Danny will be leading that for us of the ECB rate decision and reaction to it. That begins at 1:15 p.m. London time, right here on Bloomberg. Francine, meanwhile, of course, we continue to watch and read the tea leaves in Rome. Super Mario losing some of his luster. You were talking about the elections in October, which you see as very likely now, and what the potential makeup could be of the next government.
Yeah, and what's interesting actually in the split, and we have a very special guest coming up. We have Enrico Letta, former prime minister, now one of the kingmakers in parliament, and it'll be interesting to see whether he sees this split that we saw yesterday between the coalition as something reflective of the Italian electorate. The question is, if we have a right-wing coalition, what the brothers of Italy do in this? Are they Eurosceptic? And that's what we'll try and find out.
Okay, currently Italian equities down by 2%. Yields are up. That is it for the European Market Open. Surveillance Early Edition is up next. Stay with us. This is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
I think inflation will decline towards the end of this year. We're certainly seeing prices of commodities trending lower, but take it with a grain of salt.
We have to reduce our gas consumption. I know this is a big ask for the whole of the European Union, but it is necessary to protect us.
The President is committed to taking aggressive action to tackle climate change and made clear if the Senate won't act, he will.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Rome, and here's what's coming up on today's program. Well, Italian government in chaos. The Prime Minister Mario Draghi tells lawmakers he'll meet with the president where he's expected to offer his resignation. Hike, but by how much? The ECB is set to raise rates for the first time in a decade. The question, 25 or 50 basis points. Plus, turning on the taps to Nord Stream says gas shipments from Russia have restarted. Prices tumble. Now, first thing is first, let's check in on the markets. And I have to say there's a bit of a market wobble, not only because of Italian politics, but also as we await that ECB decision. Again, with Mario Draghi gone, likely we'll see elections in October. At the moment, what we're hearing is it could be October 2nd or October 9th, that election. Remember, we have not voted in the fall in Italy since 1919. What that means is that we could have a coalition in place that is unreadable at the moment, and it's definitely putting a lot of pressure on some of these Italian assets. The FTSE MIB Italy down some 2%. Euro holding for the moment at 101.94, but things could change. And then if you look at a map of Europe, it's very clear that it's really Italian assets that are hurting most other ones. Now, Italian Prime Minister Mario Draghi is the man of the hour. We thought he would resign in the lower house, but instead he's decided to go to the President Mattarella, and that's after he failed to revive a broad-based coalition unified behind his premiership. Now, in the last hour, Draghi suspended a session in the lower house of Parliament, saying he would first state his intentions to the President Sergio Mattarella. Of course, we'll continue our coverage of the story as it unfolds throughout the day here in Rome. But in the meantime, the biggest story is, of course, the ECB. The central bank will raise rates for the first time in 11 years. A question whether they hike by 25 or 50 basis points, with money markets betting even odds of either. Now, the ECB also set to unveil a new anti-fragmentation tool to prevent peripheral bond yields, now such as those in Italy, from spiking. Danny Berger joins us now from Frankfurt. She's on the ground. Danny, 25 or 50 basis points. So this goes to the credibility of what the ECB does.
It does, because they've guided 25 basis points so explicitly. You talked to Christine Lagarde only a month ago. She said that. She's put it in writing. They've said it over and over again. So if they move 50 basis points, do they risk losing the credibility of forward guidance? Now, there's an argument to be made that in prior ECB times, you wouldn't have that explicit forward guidance. Perhaps it's just a return to the orthodoxy, so it might not be a bad thing, but they are using guidance as a tool, so they might lose that issue. And at the same time, a lot of folks think that, hey, 50 basis points, it would just get us back to neutral. If inflation's at 8.6%, neutral is still accommodative given that inflation rate. So perhaps the time is now to go at it with jumbo hikes.
Danny, thank you so much. So we'll have plenty more, of course, from our Bloomberg anchor, Danny Berger. We'll also have special coverage of the ECB rate decision and reaction to it. That begins at 1:15 p.m. London time. Don't forget, because the timing has changed, so something we're not used to. It's 2:15 Central European time right here on Bloomberg. So we're now joined by Anna Stupniewska, global macroeconomist at Fidelity International. Anna, 25 basis points. Is that your base case for the ECB? And is there, as Danny was suggesting, a credibility problem if the ECB does more?
We think 25 is probably more likely, although, of course, they have been pushed and pressurized to do more, given inflation pressures and what the Fed is doing in a very aggressive way. But I think you're right. Credibility is so key, and credibility of forward guidance has to be preserved. Also, what they have on their side, in a way, is that inflation expectations do remain under control. There is no evidence of wage price spiral just yet. Inflation is mainly driven by energy and food components. So in this sense, they can afford not to go out and hike for 50 basis points. At the same time, the window of opportunity is closing for them. And we think it's only July and September, the two meetings, that they will be able to raise rates before they have to stop, given the damage to the economy.
Yeah, so Anna, I don't really understand the market positioning. Are you worried that 50% of the market expects 25 and the other 50%, expects a 50 basis points increase? Does it kind of show the anxiousness out there on the markets?
Of course, there is a lot of uncertainty, Francina. As you know, it's really a toxic mix of factors for the ECB to try to combat the factors that are outside of their control: gas flows, aggressive Fed tightening, and of course the Italian political situation. I think the market is clearly struggling with that uncertainty as well.
So, Anna, what does it mean? Where do you want to be overall as an economist? Do you worry that this impacts the disbursements, if I can get my words out, the money that they will get from the EU? What are you expecting in Italy?
Well, I think, clearly it's very tricky and complicates the job of the ECB. It complicates that fiscal stimulus, of course, as you said, disbursement. But I think for sure it undermines that unity for Europe, and that's what Europe needs today to go through this the main crisis, of course, the gas crisis related to the war in Ukraine, and Europe has to reach that consensus on area-wide fiscal support. So we don't think that government support, national support, will help avoid recession or cushion that recession. We need that area-wide fiscal support, and of course the Italian political situation is complicating things.
Anna, what does it mean for overall this fragmentation tool that we could get from the ECB? Does it need to be a deterrent, or do you worry that actually to reach the fragmentation tool, the bar will be so high that it'll be very unlikely that it will give countries like Italy any support?
Well, that's exactly what the focus is now, how credible, what the conditionality is. Again, given the situation in Italy, unfortunately, the ECB might have to use that tool earlier rather than later. But at the same time, I think they will try to communicate that they are not going to close the spreads because of that political risk. And I think the tolerance for that, for higher spreads is higher now from the ECB side, given this political uncertainty. So they want, obviously, to make sure that transmission mechanism remains in place, but not necessarily to close the spread because of that political risk premium.
Anna, thanks so much. Anna Stupnitska, their global macroeconomist at Fidelity International, joining us this morning. We'll have plenty more live here from Rome. We'll bring you the latest on the political turmoil after the collapse of Mario Draghi's coalition. This is Bloomberg.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Breaking news out of Rome. In the last couple of minutes, the president, of course, or the prime minister has said that he will resign. This is according to a presidency statement. Mario Draghi has resigned. Now, we were expecting this. We were actually expecting him to go to the lower house this morning and resign and then speak to the president of the Republic, Mr. Mattarella. He did not do that. He said he'd go straight to Mattarella and then we would hear from him. The impact on markets has been pretty brutal, if I'm honest. Italian assets have been sold off. You can see the FTSE MIB over in Italy down some 2.4%. This is of the uncertainty. Investors are worried about what comes after Mario Draghi. Again, he was a technocratic government. He reassured investors because of his politics, because of reforms under him. It was pretty convenient or pretty clear that they would access the EU funds that the EU would disperse in December. It could have also helped with the ECB fragmentation tool. Now with him gone, although he could stay on as caretaker until the elections, we go into the unknown. Well, joining us now is an entrepreneur, a business leader, Angelica Donati, chair of the Italian construction lobby group ANCE, Giovanni Donati. Thank you so much, Angelica, for always coming on to give us a business perspective, because I imagine there's a lot of anxiousness out here. We focus so much on the markets, but if you're a business leader now, you don't know who comes next.
Well, I mean, businesses have been very clear that we believe, all of the Italian business community believes that Mario Draghi was the right person for the role. We said it when he was nominated. We thought, I mean, it was the biggest piece of luck Italy had, right? One of the most prominent world leaders was our leader. He was a man, or he is a man, that gave credibility to Italy globally, both from an economic perspective and also from a political leadership perspective. He is the leader in Europe, the prominent leader in Europe. And so losing him at such a crucial moment, there's a series of very fundamental, essential reforms that need to be implemented now, before the end of the year, for the PNRR, the NRPP, to be put in place properly.
And this, Angelica, is a recovery fund money.
Yeah.
What happens if we don't access this money?
What happens if we don't access this money is that Italy's last big hope flies out the window for no good reason, really. I mean, Italy is the biggest beneficiary of the PNRR. It's almost 200 billion euros of money to be spent, but not just that, the reforms that are being put in place, which we hope will continue to be implemented, because as you rightly said, he should stay on as caretaker. We hope that there will be a clean transition into whatever the next government is. And we
Who
hope,
do you think the next government is?
I have no idea. I honestly have no idea. I think there's a lot of checks and balances that need to be worked out now. There's a lot of dissent and a lot of angst around what happened. So whoever the next government is led by, whatever the next coalition is, because I would imagine it's a coalition, I would hope, as a business person, that they would take a leaf out of Mario Draghi's book and plan for the long term and put in place reforms that actually help the country. So Draghi's credibility brought us into kind of a new pace, and we hope that pace remains.
But Angelica, I mean, if anybody has any sense, why would they go back on some of the good work that he's done?
Well, it's not a question of going back on the good work that he's done. Is that what he's done is start a process that needs to be implemented in a very rigorous and fast manner. And if it stops, then we miss our deadlines. So we have very, very strict deadlines in terms of public tenders, in terms of public tender law reform, fiscal reform, competition reform. All these things need to happen now. And if we lose too much time, then the ship has sailed and it won't come back.
So specifically, what does it mean for the construction?
So for the construction sector, the biggest, well, there's two big milestones for us. The public tender law reform, which needs to happen after the summer, and also all the big PNRR, so recovery fund tenders, which need to be tendered and assigned before the end of the year. And we're already behind schedule. We're behind schedule because due to the war in Ukraine, due to the crazy market shock on raw materials prices, we've had to readjust all our prices. The DLAIUT, which was approved last week, which was also kind of what started this whole mess, was put in place in order to allow, amongst other things, allow the public sector, the public construction sector to work on PNRR projects. And now,
do you worry that basically Italy becomes uninvestable in 6 months?
The markets have been telling us that, because if you look at the Italian BTP spread over the bund, we're at the same level as Greece again. Piazza Affari, the Italian stock exchange, has crashed this morning.
The spread wasn't as bad as it used to be.
No,
right?
But I mean, the markets are worried, and if the markets are worried, we're worried. Obviously, Italy is a country with massive opportunities. We've got a very strong entrepreneurial category, and I do believe that we've weathered other crises before. We'll weather this one, but obviously, it would have been better off if this never happened in the first place.
What kind of assurances do you need from the next prime minister or from the next coalition to make your job easier?
Long-term planning, long-term strategic planning. So one of our biggest weaknesses, I think, is that as a country, we've been very short-termist in our approach, and we need to be able to plan for the long term. We need to start thinking in the way Mario Draghi has been thinking, which is let's look at the next 10, 20, 30, 40 years, and that's what needs to be done in the long term for Italy.
Do you worry about the level of the euro, and does that impact, for example, your business?
Well, not so much for the construction sector in terms of the fact that we work. It's local. So a weaker euro could be a problem if we're importing goods from outside the European Union. So that's definitely the case. On the other hand, Italy is a net exporter, so a weaker euro for an exporting country is actually not necessarily a bad thing.
Yeah, we go back to the devaluation of the 90s. No, I'm kidding. Angelica, thank you so much.
Thank you so much.
As always, Angelica Donati, their chair of the Italian construction lobby group, Ance Giovanni. Now, coming up, it's decision day in Frankfurt as the ECB gears up for its first hike in 11 years. Will we see a 25 or 50 basis point hike? Well, we also look out for the anti-fragmentation tool. That's coming up next, and this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Rome. Now, on to the ECB. For the first time in a decade, the central bank will raise rates. The question, whether they hike by 25 or 50 basis points. Let's get straight to our lead anchor covering this, and it's Danny Berger, who joins us with a guest from Frankfurt. So, Danny, over to you.
Hi, Francine. Thanks so much. Yeah, a lot of questions surrounding today. Really happy to say that with me today is Esther Reichelt, FX strategist at Commerzbank, to try to sort through some of the chaos. Esther, thanks so much for joining. Well, we have to start perhaps the political chaos, considering just the breaking news. Draghi finally stepping down, saying he will be resigning. What sort of impact, or is this impactful for the markets you watch?
Yes, absolutely. I guess this is quite negative for the euro, in particular ahead of the ECB, because it really puts the spotlight on the ECB. We have this discussion, 25 or 50 basis points, if they don't deliver 50 now, it looks as if they are bowing to the whole Italy chaos. And of course, it also puts the focus on this new transmission or anti-fragmentation tool they are most likely going to discuss today.
Yeah, I mean, a lot to dig through there, but what does it mean in terms of actually being able to put to use an anti-fragmentation tool if spreads are widening because of politics in Italy?
Yeah, that's really bad timing for the ECB, because there's always this danger that they are leaving their mandate, they're only allowed to act within their mandate. And if they are now implementing an anti-fragmentation tool, that would look as if they are helping out Italy in this political chaos. And in the end, it is fundamentally justified that spreads are widening if there's this high political uncertainty in Italy.
But if I'm a trader today, what am I trading on? Am I trading on 25 or 50 or the anti-fragmentation tool?
That's a big question, because typically the short term, it's more important 25 or 50, because it has a signaling effect with respect to what more is going to come, how decisive the ECB is going to act on inflationary risks. Actually, now this might change, and the anti-fragmentation tool gets more into focus, because it's more important in the medium term. How stable is the common currency politically? Because we are having this fragmentation problem. It's the very foundation of the common currency.
Yeah, perhaps some irony there that it's driven from Mario Draghi, a man who helps preserve the euro as well. Yes. Okay, to the former point, in the short term, Stephen Englander over at Standard Chartered says that if they go at 25, the market is set up in such a way that euro could test parity again. Is that a reasonable expectation?
Absolutely, yeah, because it would indicate, in particular now following these rumors about 50 basis points, in particular now following this Italian chaos, it would signal that they are cautious, they are acting cautiously, and we're having inflation, so far above target. We have the Fed moving forward quite decisively, the ECB would drop far behind the curve if they are now not showing to the market that they are willing to do whatever it needs or whatever it takes to come back to Draghi. And it would be very bit signaling for the euro if they don't deliver.
I do wonder about the staying power of moving 50 basis points in terms of strengthening the euro, because I think about, obviously, a very different situation, but Chile, for example, trying to strengthen the peso, that doesn't work. The BOJ today raising their CPI forecast, that doesn't do anything to strengthen the yen. Can the euro find sustained strength when it is all about king dollar at the moment?
Interestingly, it might depend on the fragmentation tool. You know, like it's not 25 or 50. It has an importance for signaling effect, but for the long term, if there is a way the ECB could implement an effective and that's important, legally feasible tool that would allow them to implement their monetary policy as they please, and not having to worry so much about individual, specific point of member countries, that would put the euro in a much better position. And in the end, not everything is looking great in the US either. We have this recession risks. But in the end, then in the medium term, most might depend on whether we are going to have a full-blown gas crisis in the eurozone.
Well, talk to me a bit about that, because we have Nord Stream, of course, today saying that flows has resumed. Can we breathe a sigh of relief yet?
No, absolutely not. Because we don't know what kind of supply we will have in the end. The EU has or is trying to introduce some gas-saving measures next week. But whether that will be sufficient, we don't know. And in the end, even if it will be, we will have a structural change away from cheap Russian gas, in particular in Germany. And this will be a burden on the euro due to the effects on the potential growth and also the yield outlooks.
Okay, Esther, thanks so much for joining. I'll let you go. I know you have a very busy day ahead of you. Francine, that was Esther Reichelt of Commerzbank.
Danny, thanks so much. What a day. I mean, if you're on a trading desk today and you see the market and it's 50-50, whether it's 25 or 50 basis points, you probably have to have a second think and speak to your chief economist most of the day. Now, we'll have special coverage of the ECB rate decision and reaction. It begins at 1:15 p.m. London time. Don't forget, the times are a little bit funky today, 2:15 Central European time, right here on Bloomberg. Coming up, Italy's prime minister has resigned. We'll have an exclusive conversation with Enrico Letta. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to Bloomberg. Now, Mario Draghi resigns as Italian Prime Minister. We get all of the latest on a pretty dramatic day, 2 days here in Rome. Hike, but by how much? The ECB is set to raise rates for the first time in over a decade. The question, 25 or 50 basis point hikes. Plus, turning on the taps, Nord Stream says gas shipments from Russia have restarted. Prices tumble. Well, good morning. A bit of a worrying moment here in Rome. Welcome to Bloomberg Surveillance Early Edition. As ever, I'm Francine Lacroix, but this time I'm in Rome. Now, this is the market, and the market perception is that they don't know what will happen in Italy. We talk now about coalition. Certainly, the perception is that we go to elections, and that could be as soon as October. It could be, there's a 70-day rule, so it won't be before October. I think it's the first time that we have elections in the fall since 1919. The FTSE may be under pressure, down 2.5%. Euro dollar holding at 1.0187, and then of course that begs questions about the ECB fragmentation tool, anti-fragmentation tool, and then the recovery funds that Italy was meant to touch in December. Now the Italian Prime Minister has resigned. He's set to address lawmakers a little bit later today as the country begins now to look ahead to the process of choosing a new leader. Joining us is one of the best perspectives we could get you, and this is of course what happens next. He's the former Italian Prime Minister Enrico Letta. Much more than that, he's one of the kingmakers, possibly in exactly one that really understands Italian politics like no one else. Enrico Letta, thank you for joining us. If you're an Italian investor, you worry because you think that this is a mess at the moment and you see no end in sight. First of all, who's to blame for the demise of Mario Draghi?
Oh, it is very easy to say because yesterday we had a moment in which the parliament decided, and there were 3 political parties decided not to be supportive of Mario Draghi's program, and these parties were at the beginning 5 stars, then yesterday, and that was unexpected, and I think really crazy and irresponsible, Lega and Forza Italia.
Do you regret staying in a coalition with Mr. Conte?
Well, of course, today the discussions about the future coalitions are completely different from what we had until yesterday, because what happened yesterday, it is a turning point in Italian history. We had a government working very well with the respect of the entire community, Italian community, not only business community, the people. The people. We had the entire weekend full of calls by people, working people, representative of municipalities, asking for the continuity in this government, but also the respect at European level and at world level. And now everything is gone, and I think it's the responsibilities are very clear. We supported Draghi until the end, and we will try to keep fighting on Draghi's program in the electoral campaign and after the elections.
So first of all, do you think what happened yesterday is reflective of how the Italians would vote in an election?
No, it is not. I think yesterday is a turning point. We had polls until yesterday, but the polls were related to the attitude of the parties that the parties had until yesterday. For instance, Lega and Forza Italia were voted by people, entrepreneurs, SMEs, thinking that they were supporting Draghi on the right track. But now they understood how crazy was the choice of Forza Italia. It was just a choice of power, just the idea to get power and to redistribute power, but they don't understand that we needed and we need to continue on the program that Mario Draghi proposed to the country.
Mr. Letta, if we go to elections, and I think I was looking at polls saying that the most likely outcome, also almost the only outcome on Wednesday morning, would have been a right-wing coalition. Is it still the case?
I'm sure that the voters will change their mood.
Really?
They will change their mood because what happened yesterday is a storm for Italy, and it is a storm also for the expectations of the Italian people. Working every day and thinking that politics and the parliament has to help them, not has to work only for their own interests. What the parliament in the large majority did yesterday, we were on the other side. We were on the side of responsibility. We supported Draghi. But the rest of the parliament decided on their own interest in terms of parties, not the interest of the country.
So we'll see elections early
I
October?
think so. End of September, first days of October, first year that we will have elections the fall. But we had last year local elections with electoral campaign in the fall, and 2 years ago regional elections, so we are ready.
So what does this mean? I mean, who has it worse? Is it the Europeans? If you're the ECB ready to announce some kind of anti-fragmentation tool, how do you look at Italy right now?
I have to be very clear on that. Italy is a great country with a great economy, great people. It is absolutely democracy. Democracy means that we have the vote. The vote will be September instead of March. Yes. So it doesn't change so much. It complicates because what Draghi was supposed to do was very important also for the relaunch of the country during autumn. No. Of course, it is not the case, but I'm sure that the electoral campaign will bring the voters to understand who is responsible and who is not.
There's also a big chunk of money on this EU recovery fund, which is due. Do you think campaigning will be supporting the reforms to make sure that Europe gives Italy that money?
I'm sure, I'm sure that all the parties, they have to be compliant with this process of reforms related to the next generation EU recovery fund money. It is impossible not to be compliant with this money and with this process. So what I propose to all the parties, and I will propose to all the parties during the electoral campaign, and to sign a pact. And the pact is that we will be all compliant with this choice and with this program, because this money is European money. It is for Italy, but it is European money.
Do you think they'll sign that pact?
I hope so.
Is the big winner in this Vladimir Putin?
I'm sure that Putin will have a cheers with his Prosecco, maybe, and he will be very happy today. And it's not a good news for Europe, for the West, for Ukraine. And Draghi and our coalition, we were very strong in supporting Ukraine. Italy was one of the most supportive countries. We have to keep fighting and keep helping Ukraine, but I'm sure that Putin today is very happy.
What do you worry about the most in the Italian economy? Again, it's inflation, it's the cost of living, it's this huge proximity, actually, to Russian gas.
I think the main problem today are inequalities. Inequalities are very high in Italy because of the past, because of pandemic, but they will raise if there's not the anti-inflation capacity that the government was able to put in place. And this is why I think we have to have elections as soon as possible. We hope to win elections, and we hope to continue the program of Mario Draghi.
I mean, a couple of questions, actually, that I've been getting from a lot of investors is, we haven't voted in the fall in Italy since 1919. Does it actually change anything?
I don't think so. I think the only thing that is that will change it is the fact that we never had a vote with the clear idea that there was a government working well for the country and for interest of parties, the right parties, Lega Nord, Forza Italia, 5 Stars, everything has collapsed. That is something completely new.
Do you think he could lead a government come September, October?
It depends on the vote. It depends on the way in which we will run the electoral campaign. But my answer is very short and very clear. I'm very, very confident with the Italian voters. The Italian voters are always very wise, and they will be very wise this time too.
Mr. Ricoletta, always great to have your perspective and your insights. Thank you so much. And we wish you the best of luck, actually, for today, because it's going to be tumultuous, right?
It will be, but we have to be confident. Italy is a great country, and Italy will overcome this crisis.
Yeah, I mean, it's nice looking at the rooftops to actually be quite optimistic about the country, but then you look into politics and there are question marks. Coming up, we'll dive deeper into the chaos unfolding with Italian politics. Don't miss our conversation with Renzo Rosso, the chairman and co-founder of the international fashion group OTB. That's coming up next, and this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Rome. Now let's get straight through Bloomberg Business Flash. Here's Leanne Gerrans in London. Hi, Leanne.
Hi, Francine. Tesla says it sold off about 75% of its Bitcoin holdings. The convergence added nearly $1 billion to its balance sheet. Tesla beat second quarter earnings estimates, reflecting its progress in tackling supply chain issues and COVID lockdowns at its China factory.
Q2 was a unique quarter for Tesla due to a prolonged shutdown of our Shanghai factory. The past few years have been quite a few force majeures. And it's been kind of supply chain hell for several years.
Now, Microsoft is eliminating open job listings, including in its key Azure cloud business and security software unit. The company says a hiring freeze will continue for the foreseeable future, but it's still honoring job offers that have already been made. A hiring slowdown was disclosed in May, which mostly affected its Windows Office and team groups. Google and Lyft are also hitting the brakes on hiring amid mounting recession fears and rising inflation. Google says it will pause hiring for 2 weeks to allow the company to review headcount needs. Meanwhile, Lyft will shut down its car rental business and cut 60 jobs. That's as the ride-hailing giant grapples with a labor shortage and a fall in its stock price. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, we understand, and this is from local agencies, that Russia's planning the annexation votes in Ukraine regions by September 15th. I think this comes from the Russian news agency, but we'll dig a little deeper into exactly what this means, not only their intentions, but also what it means for security, what it means for arms to Ukraine. Now, we've been discussing this all day. The Prime Minister, Mario Draghi, Prime Minister of Italy, he's resigned. Joining us now to discuss the chaos is the founder and chairman of OTB Group. He's Renzo Rosso. He's OTB's, of course, founder, an international fashion group with a range of global brands, including Diesel and Maison Margiela. Thank you so much, Mr. Rosso, for joining us. Italian business, give me the state of play today. Are they worried that they will no longer have Mario Draghi as Prime Minister?
You know, Mario Draghi is really someone that is the first time in our life from the Soviet arrival. We started to be respect of the country. After 30 years,
Mr. Rosso, I'm gonna cut you off. Mr. Rosso, I'm so sorry. I'm going to cut you off because I think we're having some Wi-Fi trouble sometimes with all these virtual interviews, so we can't hear you clearly. So we're going to take, of course, a look at markets. So we're going to talk a bit about Italy, and then I hope to see you back in a couple of minutes with crystal clear communication. Coming up, it's also the final two in the UK. So there's a lot of politics going on. It's Foreign Secretary Liz Truss versus former Chancellor Rishi Sunak. So we'll bring you the latest on the race, also to succeed Boris Johnson as UK Prime Minister. That's later this hour, and this is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Rome. Now let's get straight to UK politics. Not dull either. The political British landscape. Well, the UK's outgoing Prime Minister had his final parliamentary grilling yesterday, and I have to say, it was pretty exciting to watch. Boris Johnson's successor will either be the Foreign Secretary, Liz Truss, or the former Chancellor Rishi Sunak, after the pair came top in the final round of voting by Conservative members of Parliament. Well, our expert in the UK, I think she was also in the gallery when Prime Minister Johnson said "Hasta la vista, baby," is the one and only Lizzie Burden. Lizzie, the focus shifts to the grassroots Tory parties. What can we actually expect from them?
Well, Francine, they're a very different beast to the MPs that had made Rishi Sunak the front runner in all the votes that we've had so far. So actually, they favour Liz Truss. That's what the polls say, although the polls can fluctuate because it's a hypothetical question, of course, to ask who they'd prefer to be the next Prime Minister. It will come down to who can convince the membership that they're really the true heir to Margaret Thatcher. Liz Truss is promising tax cuts from day one. Rishi Sunak saying he wants to wait until inflation's under control. We actually had Sunak ally and former City Minister John Glenn on Bloomberg TV yesterday, and he said, think about it, they're both tax cutters, they just have different timescales for it, and that's the message that Sunak's team are going to try to hammer home over the next 6 weeks when they're campaigning to the grassroots. Although Liz Truss might steal an advantage with the postal ballots being posted out in the first week of August. Could be a done deal before we know it.
Yeah. Lizzie, I have to say, yesterday it was pretty fantastic watching Boris Johnson kind of doing Johnson at his best at, you know, the last Prime Minister's questions. Hasta la vista, baby. Will people, like, miss him in Parliament, or are they happy to get rid of him?
I think they'll have to miss him, because when I was in the public gallery, it was laughter all around when he did that Terminator impression. But there were also groans, I have to say, when he tried to hammer home what he thinks is going to be his legacy on Brexit, on Ukraine, on the pandemic. Seemed a little tired to be trying to rewrite history in his favour again. He tried to do that in his resignation speech in Downing Street. But he also had a little advice for whoever is his successor.
To my successor, whoever he or she may be. Number one, stay close to the Americans, stick up for the Ukrainians, stick up for freedom and democracy everywhere. Cut taxes and deregulate wherever you can to make this the greatest place to live and invest.
A showman to the end.
A showman to the end. I have to say, stay close to the Americans. Do not, you know, do too much on social media, or don't think about social media too much. I mean, good words to live by. Lizzie, thank you so much. Lizzie Burden there with the very, very latest on UK politics. Yeah, wise advice. Let's get back to our discussion on the chaos in Italian politics. Still with us, we hope with a better connection, is the founder and chairman of O2B Group. He's Renzo Rosso, and of course, this is a international group, including Diesel and Miso Margiela as his brand. Renzo, can you hear me first of all? And are you worried about what comes after Mario Draghi?
But, you know, this is a strange situation. I can't believe that we are astonished. The Italian people that are running the country in terms of economy, the Italian salespeople, entrepreneurs, we are astonished regarding the situation, because it's the first time in our life that we have a so fantastic gentleman, Mario Draghi. I think the world really loves him. Everybody loves him. And that finally we can have started to have a contact with all countries in the world. We started to have appreciation from the other country. That the last 20 years, Italy was not very much supported from the other countries. This is the first time that we have someone really can drive the economy, solve the pandemic. We have also the worst problem, the Ukraine. And I cannot understand why this stupid politician, they can really broken this fantastic magic parliament.
But Renzo, look, you're one of the most famous and successful entrepreneurs, frankly, that Italy has ever had, especially in the fashion and luxury space. What do you need from the next government?
But from the next government, now we go to the votation. I hope that the Italian people finally start really to see who was wrong and who are right. Because normally all these politicians, they just play and blame on the opposition. They never suggest something. They just want to think about themselves, and they go to reach a vote on the not on the right way. So I hope this time finally the people really can, Italian people can wake up. I hope it can be a good campaign for the next votation. And what I dream that maybe if someone's coming up with maybe more Republican, more on the middle side, and maybe we can hire again Mario Draghi, because I don't see any man at the moment that really can substitute Mario Draghi. So the Italian politician right now, that everybody wants to be the winner.
Yeah.
No, they say
Lorenzo,
that
this
the
is because
Italian...
he's respected, or because he can push reforms?
No, the Mario Draghi is very well respected, but you know that this government was finished just because a few Italian politicians, I think, took over their own territory, just on the proper interest. They don't care about the Italian interest and the Italian economy, and this is why Italy for the last 20, 30 years was a disaster. Italy very strong, and Italy country is a stay alive thanks to entrepreneurs, thanks to the people that are running the industry, thanks to the people that really every day support Italy. And not from the politician side, we are a disaster. We really, this time, I hope that we can find a right solution, a right combination, and maybe I hope that we can bring Mario Draghi again on board.
Renzo, if there's no Mario Draghi, what do you need from a prime minister or a treasurer or a minister of finance? Is it help with energy? Do you worry about this inflation that it's running rampant, out of control, and what that means for business and for wages?
But you know, Mario Draghi was perfect. I just needed to find someone, or him or another one, that have the same attitude, and to be in position to drive the country, because right now it was impossible, because it was everybody on the government, and it's impossible that everybody can be on the government. The economy, I think, is incredible. I have also this formal mission from the Italian government, how to take to give visibility to the best company that we have in Italy. And I am incredible discover so many companies that we have from high level to the middle level companies that really are fantastic. And I hope.
Renzo, we're running out of time. Next time we do this interview in person. Renzo Rosso there from OTB. This is Bloomberg.
The end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale, as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada. Tapi nggak kayak dulu. Kalau dulu ramai sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question. That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions. Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From business's most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
I'm always nervous going into the summer. Bad things happen to the market in the summer.
All the talk about whether we're in a recession, I happen to think we are, is of secondary importance. What's of primary importance is inflation.
The doom and gloom on recession is a little bit exaggerated at the moment.
In the Eurozone's case, we think that it will dip into a mild recession.
The real problem is that the Eurozone needs to proceed very quickly towards economic and political integration.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It is 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Mario Draghi calls it quits. Italy's Prime Minister resigns in a move that will add to the country's political chaos and stoke economic uncertainty across Europe. Meanwhile, Russia resumed gas flows to Europe via the Nord Stream pipeline, providing some relief for a continent that was bracing for a complete halt of supplies. The European Central Bank gets off the sidelines in the fight against inflation. The ECB is about to raise interest rates for the first time in 11 years. And Tesla CEO Elon Musk sees an end to what he calls supply chain hell. Musk says the electric car maker could have a record second half of the year. Welcome to Bloomberg Surveillance Early Edition. I'm Tom McKenzie in London with Matt Miller and Kaylee Lines in New York. Anna Edwards is off today. And Kaylee, a reminder as well of the geopolitics with Russia announcing plans for a vote, an annexation vote in some of the territory in which it occupies in Ukraine.
Yeah, plans for that vote to happen by mid-September, Tom. So we'll have more on that story in just a moment. But first, we want to run you through the market action, starting with Asia overnight, where really it was a mixed session. On the one hand, you had stocks down in Hong Kong and China, a large part of that due to the growing crisis in the property sector and concern about defaults on the rise. So the Hang Seng Property Index was down about 3 percentage points overnight. The other big story out of Asia, though, of course, was the Bank of Japan decision. You had the Nikkei 225 up by about 0.4%. No surprise, they're keeping it easy. They held rates unchanged. They're still targeting 25 basis points on that 10-year yield, even though their inflation forecast was raised more than expected to 2.3% for the year. So on that 10-year yield, we're south of 25 basis points, actually a little south of 24 basis points, while the yen is fractionally weaker against the U.S. dollar, trading at 138.69, Matt.
All right, well, we are seeing a little bit of a sell-off here in futures. Right now, down just about 0.25% after really a great week for the S&P 500. The U.S. 10-year yield rising just about 2 basis points right now to 3.0471. So as that yield rises, investors have less of an incentive to buy equities because you can get more from the 10-year or more than you would in relation to the S&P dividend. Now, NYMEX crude down $3.50, so a pretty big move for oil, coming in well under $100 after yesterday's retreat from relatively high levels. 96.44 is what we're seeing for Text Intermediate, and Bitcoin is also off 1.6% since midnight, but is still around 23,000 at 22,881. It's a very correlated asset, and that's probably why we see it going down today. Tom, what do you see in terms of Europe?
Yeah, Matt, we're zeroed in, of course, on what's happening in Italy, and that's where the biggest losses are being felt across the equity markets, now down 2.2% across the major index, the FTSE MIB, over in Italy. We do have the story around the gas flows coming from Russia back to 40% volumes. We'll break that story down for you. In terms of the other major economies, you're seeing pressure in the UK down 0.4%. The German DAX is down 0.8%, and over in France, losses of 0.3%. But really, it is Italy, of course, where the selling pressure is most acute, particularly the banking sector. The last time I checked, losses of around 4% in that sector. Let's switch it on and see how things are playing out then across European equities as we look ahead to that decision by the ECB, the debate as to whether they go 50 and front load or stay with the guidance of 25 basis points. If they go 50, Standard Chartered said you could see a 2% move in euro dollar, the single currency currently at 1.01, just gaining 0.1%. In terms of the broader benchmark here in Europe, losses of 0.4%. And of course, we continue to look at BTPs. That Italian debt, the sell-off has been pretty strong. 17 basis point move higher on the benchmark 2-year. That's the 2-year. We're looking at the 10-year as well. That has also seen a big spike in yields, of course, on the pressure around Italian debt and the political risk, and gas as well on the back of those flows from Russia, just down around 4%. Kaylee.
So many European stories to keep on top of this morning, Tom, but let's begin with the political chaos in Italy and get more on that now as Prime Minister Mario Draghi has offered his resignation to Italy's president. Bloomberg's Francine Lacqua joins us now from Rome with more. Francine, is Draghi resigning now the only option, and what happens next?
Yeah, so he's resigned, and really, Kaylee, good morning. It was 100% the only option because we thought he had support not from one coalition member but the others, but actually the others at the end of the day yesterday also let him go. Now, this was not because they didn't believe in him. This was bickering behind, between the coalition members, but it doesn't matter. He's no longer in charge. We'll go to elections probably in September and October. And the question is, what does it mean for ECB fragmentation rule? What does it mean for access to the EU recovery fund, so badly needed, 20 billion that should be given to Italy if they continue with the reforms? And whoever the next government, whoever the next prime minister is, will they be able to guarantee, of course, to stay on the path to reforms, to make sure they have access and friendly relationship with Europe and the rest of the world?
As I was reading his emotional speech, I thought, man, they're going to regret this. Do they regret this? What's the reaction to the turmoil that is almost like the resting state of Italian politics?
I mean, I know we've had a lot of governments, but think about this, Matt. If you look at, the inflation, if you look at the cost of living, if you look at the need for stability to encourage the ECB to maybe give you a helping hand and that EU recovery fund, it probably could not have come at a worse time. Will they regret it? I think it depends on what investors do, on what markets decide to do. But the papers this morning were pretty punchy. Look at this. Shame on Italy from La Stampa. Il Tempo, which is a center. I'm going to actually not show you this because it's a swear word in Italian, but they're pretty mad about what's happening.
We're adults.
They call it the suicide of Mario Draghi because he was uncompromising. And then this is goodbye, Mario Draghi. Look, it depends on if the next person in charge is considered a safe pair of hands, liked by investors and stable, to see whether markets and voters will regret it. But then it's democracy. You can't go against democracy. Something needed to happen, and an election it is.
All right, great coverage for us out of Rome, Francine. Thanks so much for joining us. Bloomberg's Francine Lacqua out of, on the ground there in Italy. Tom?
Okay, here in the UK, Foreign Secretary Liz Truss ousted Penny Mordaunt in the race to become Conservative leader and the UK's next Prime Minister. She will compete against former Chancellor Rishi Sunak. The focus now shifts to about 175,000 grassroots Tory members who make the final choice before the winner is announced on September 5th.
All right, let's talk about what's going on in Russia. Tom, you were highlighting at the top of the show that the Kremlin now plans to hold referendums in Ukrainian territories occupied by its troops to give grounds for President Vladimir Putin to absorb them into Russia as early as September. Joining us now for more is Mark Champion, our senior reporter for international affairs. And Mark, you know, I saw this headline. My first thought was, is this the beginning of the end of the war?
Yeah, I mean, a good question, and one that I think we'd all like to know the answer to. I mean, essentially, this is something that the Russians have been wanting to do for several months already. The reason they haven't done it was that they couldn't secure the support from the bureaucrats that they needed to organize an election, and they couldn't really guarantee that they get the kind of result that they want. Nothing there has changed. What seems to have changed is the delivery of U.S. HIMARS, these sort of longer range, very accurate artillery that the Ukrainians have taken delivery of, and they've been using them to destroy dozens of weapons depots behind the Russian front lines. This has been a very successful strategy, and it's difficult to know exactly what the impact has been, but there seems a clear link between the reduction in the ability of the Russians to deliver firepower at the front and these attacks. And now you have the Russians saying, look, we're going to go ahead, but it looks like they're going to go ahead and get these referendums done so that they therefore have a sort of stronger claim to be able to say, this is now part of Russia, you attack or try to take this back at your peril.
Okay, dusting off a well-used playbook, of course, and we'll see what the response is from Ukraine and its allies. Mark Champion, of course, breaking down the latest on those moves by Russia. Thank you. Meanwhile, Russia has resumed sending gas through its biggest pipeline to Europe after a 10-day maintenance period. That will provide some relief, at least, for the continent that's racing to store the fuel before winter. Bloomberg senior executive editor for energy and commodities joins us now. Will Kennedy. Will, thanks for joining us on the set. The significance then, we're back to 40% volumes, but a lot of uncertainty still around these gas flows from Russia to Europe.
Of course. In the immediate reaction, gas prices are down a little bit this morning, and that's relief that they did come back. There had been some concern during this maintenance period that it wouldn't come back, that the Russians would just say, you're going to get no more gas this winter. We're back to 40%, as you say, but that's unlikely to be the final story here. President Putin yesterday was talking about more maintenance that needs to happen on the pipeline in coming weeks, which may give Russia an excuse to put flows back down 20%. There's a lot of gamesmanship here. Clearly, as we go into the winter, a winter where Europe is unlikely to have all the energy it needs, Russia is going to use the flow of gas into Europe as part of its overall strategy.
All right, Bloomberg's Will Kennedy, thank you so much. So massive question marks around the gas story and the economic consequence for Europe, plus the political turmoil in Italy, all happening at the same time that the ECB is supposed to make a monetary policy decision today. It is a very, very tough job for Christine Lagarde and co. Of course, they're expected to raise rates for the first time in 11 years. But there's a lot of issues that they have to take into account. Bloomberg's Danny Berger joins us now from Frankfurt for more on what to expect. So, Danny, it's not just about how much they hike rates. We're also looking for some kind of clues as to what that anti-fragmentation tool or transmission protection mechanism is going to look like.
Right, and the political chaos in Italy making that so much more difficult with the anti-fragmentation tool. Credibility is at stake here for the ECB because already off the bat, there are two big ifs. If it's politics that is widening out Italian spreads, does it look optically bad for the ECB to have an anti-fragment tool when their mandate is price stability? It is certainly not interfering in local governments. Of course, we're also expected to face a challenge from the German court system on that anti-fragmentation tool. So that's one side of the credibility coin. The other side is 50 or 25. I was talking to David Cole, Julius Baer chief economist earlier, who said the only argument for going at 25 is a forward guidance credibility. They have guided so explicitly that they risk using guidance as a tool. But he says, look, perhaps that's what's needed. Perhaps we go back to the old days, kind of ironically, of Mario Draghi, where you didn't have that explicit guidance. The debate for 50, which I should say markets are split right now, it's a coin toss, whether or not it'll be 50 or 25, is inflation. It is at 8.6%, and it frankly does not make sense to have such accommodative and negative rates right now.
All right, Danny, thanks very much for joining us. Danny Berger there, standing outside the ECB headquarters in Frankfurt. Don't miss our special coverage of the rate decision and reaction to it beginning at 8:15 a.m. in New York, 1:15 p.m. in London. Now, President Biden says he expects to speak with China's President Xi Jinping within the next 10 days. This comes as the administration is considering whether to lift some tariffs on Chinese imports in an attempt to ease inflation. Jack Fitzpatrick, Bloomberg government reporter, joins us now out of D.C. for more. So, Jack, are we optimistic that this will happen?
Well, you know, the president said that he expects this phone call to happen in the next 10 days, but there's been a little bit of a pumping of the brakes since that comment by the president. Even if the phone call does happen, behind the scenes, the White House officials have downplayed any expectations that this would be a call specifically about tariffs, even though, of course, the call would raise the question about consideration of lifting Trump administration tariffs on China, especially with what we've seen on inflation figures, but there would be a pretty broad agenda for the call if it were to happen. In addition to tariffs, you know, the tension with China over Russia and their refusal to sign on with other countries in terms of sanctioning Russia would be one issue. Climate issues would be another. So obviously it would be a major call if it is to happen in the next week or so, and the tariff question is a key question, but the White House has not followed up and made it clear that would be at the top of the agenda, so we have to limit our expectations on that front for now.
Okay, Jack Fitzpatrick of Bloomberg Government in Washington on that potential call between the two presidents of China and the US. Meanwhile, onto a corporate story of the hour, really. Tesla beating profit estimates in its latest quarter and also selling a 75% of its Bitcoin stake. The results reflect the company's progress in getting production back on track while tackling supply chain hurdles and COVID lockdowns at its factory in China. CEO Elon Musk spoke yesterday.
Q2 was a unique quarter for Tesla due to a prolonged shutdown of our Shanghai factory. The past few years have been quite a few force majeures, and it's been kind of supply chain hell for several years.
Okay, Craig Trudell, Bloomberg Global Qatar, joins us now for more in the London studio. Craig, it was a beat, obviously, for Tesla, but the outlook is still somewhat murky.
Yeah, I think the idea that they would have potential for a record-breaking second half of the year is not necessarily all that exciting, in the sense that when you think about where they were last year with 2 assembly plants globally, they have 4 now, so I would sure hope so that they would have a record-breaking second half. But you know, the question is really how quickly can they get those 2 new plants in Germany and in Texas up and running. And there was a lot of talk about one of Musk's favorite phrases, force majeure, things out of Tesla's control. So while he sounded optimistic, as he often does, in sort of giving the forward outlook for the company, he was maybe a little bit more tempered than we sometimes can hear him be.
Yeah, well, it's all relative. More tempered for Elon Musk is still sometimes more excited than anyone else. Bloomberg's Craig Trudell, thank you so much. Now, another auto story that we're watching, a Bloomberg scoop yesterday that Ford is preparing to cut as many as 8,000 jobs as it tries to fund its push into EVs. People familiar with the matter say the cuts will come in the new Ford Blue unit, responsible for producing internal combustion engine vehicles, as well as other salaried operations throughout the company. Meanwhile, Microsoft also is taking action on jobs, eliminating many open ones, including in its Azure cloud business and its security software unit, as the economy continues to weaken. Microsoft said the hiring freezes will continue for the foreseeable future. And as for the impact that's having on both of those stocks in pre-market trading, we do have Ford basically unchanged in early hours, but Microsoft is down about 0.9%. And there are plenty of other stocks on the move as well, one of them being United Airlines, which reported after the bell. Yes, it ended a streak of 9 consecutive quarters of losses, but its profit came in below expectations, and it's having to pull back on its capacity expansion plans for 2023 because they just really need to get a handle on the flight disruptions they're currently seeing. So that stock is down 7%, dragging down peers like American and Delta by 2 to 3% as well. And elsewhere in the travel space, Carnival is taking it on the chin this morning after announcing a $1 billion stock offering. It's down almost 11%, and its peers, Royal Caribbean and Norwegian, each down a little more than 5%, Tom.
Okay, some of the movers to watch today. Coming up, meanwhile, the threats to Europe's fragile economic growth. Of course, they are numerous. We will get analysis on all of that with the global head of economic research at UBS. Stay with us. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Good Thursday morning. This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons here in New York. Tom McKenzie is in for Anna Edwards in London. Take a look at BTP spreads. Now, this is the difference between the yield on Italian debt and the yield on German bonds, which are considered the benchmark for the European area. They have blown out, for those of you listening on radio, they have come back up higher than we've seen since basically the beginning of June because of the political turmoil that we're honestly used to in Italy, but they've been so low for the past year and a half as Draghi's been in charge. Aaron Captain, UBS chief economist, joins us now to talk about what the loss of Draghi means for Italy. Of course, Aaron, we assume that he's going to stick around long enough to put the budget together, but even that will be contentious. What does this mean for the Italians?
Well, I think there's sort of two immediate issues. So one is it makes it more difficult for the ECB to roll out the anti-fragmentation tool, depending on what the conditionality is that they attach to that. If there's no functioning government in place, then there's going to be uncertainty about what the future government will be willing to implement. But the other problem is that Italy at this stage is still 3.5% of GDP away from a debt stabilizing primary. So, creditors need to have some degree of confidence that the future Italian government will be able to deliver that type of adjustment to stabilize the debt. And pending that, there's heightened credit risk that you need to reprice. So I think we're trying to find a level here that's sort of reasonable in terms of that credit risk.
Aaron, where does that mean you focus in terms of BTPs and a potential next upside? Where do you expect that to go? You talk about the risks around the anti-fragmentation tool. We should get some more details out later today. Currently around 354, 352 now on the 10-year BTP. What are you looking at in terms of the next level?
I think, right, the tool's coming. I think that should be mostly priced now. And I think expectations are that it'll be, at least in its design, will sort of tick all the boxes in terms of being open-ended, no constraints on buying amounts, no issuer limit, no capital key, some ex-ante conditionality. So I think that's largely what's expected. And hence, right now, it's a bit asymmetric in the sense that you have lots of political uncertainty. And I think next stop on BTP spreads is 250.
250 is the next stop. What does this mean for the ECB's rate hiking cycle then? 25 basis points or 50 basis points? Does it make it that much more difficult for them to front load given the economic challenges now in Italy?
No, I don't think so. I mean, this is the first hike. It's easy to be aggressive early in the cycle. Whether they do 25 or 50 is, I think, neither here nor there. I think they do need to roll out the anti-fragmentation tool today, right? There's uncertainty about that. They've been discussing it since April. I mean, these are not the choices are not that hard, right? It's pretty obvious what the evils are that they need to choose from, but obviously getting to an agreement is hard. So, look, if they do that today, then I I don't see why it would really matter if you do 25 or 50. That's a different decision, right? Do you adhere to your guidance or not?
Well, Arend, as you say, this is just hike number one. The question is, how many hikes are they actually going to be able to execute given the deteriorating economic environment? I was speaking to a woman from Capital Economics yesterday. She said that she sees the ECB getting to 2%. Can they realistically get up there given the weakness they are hiking into?
I mean, we have a baseline where they thread the needle and then maybe get to 175 by the end of the year, but then absolutely everything needs to go right. So right now you're already at maxed out in your LNG imports. If you sustain the current sort of Nord Stream gas storage, then you can just about get there without any rationing. But if you have a cold winter, you're already short. So I think that is really best case scenario that you get to those type of levels. I think actually near term, the risk is that the window is going to close on them. So I think this meeting, I think one of the reasons, in addition to just getting a move on of doing 50, is that by the September meeting, we could be in what looks like a recession, right? So if they, even without the rationing, it is now possible that in Germany they start to, they trigger Article 24 on their emergency gas law. They basically lift energy prices by, we think, as much as 50%, and then you have so much additional consumer drag that you start to generate negative GDP growth. So once you get into that type of dynamic, I think the hiking cycle gets aborted pretty quickly. So when we think through all these different scenarios, they're all sort of gas related, like what are the different degrees of gas disruption, and they basically give you lower stop out levels on the normalization cycle. So I think 175, 200 is absolutely best case. I think if you start sort of probability weighting those gas scenarios, you end up with something quite a bit lower potentially than what the market is pricing.
Well, it seems as if all central banks are sort of stuck between a rock and the hard place, but the ECB has their hands tied more than any of the other major central banks. Do you agree?
Yeah, I agree, and partly because, of course, they've been most respectful of their own forward guidance. So you could say, well, they've trapped themselves, but by the same token, they're the ones that probably preserve the most credibility in doing future forward guidance. So there's a cost to pay for obviously moving slowly. But they have the additional constraint of, I think, having a much more severe till risk like right ahead of them, which potentially stops them short on the normalization. So yeah, I agree with that. And inflation hasn't even peaked yet, right? So we think inflation will peak maybe by September, and that's barring any further sort of price disruption to energy prices.
All I know is that I do not envy Christine Lagarde today. Thank you so much to Arend Captain of UBS. Now, keeping you up to date with news from around the world, here's the first word. A Biden administration official predicts that a price cap on Russian oil should take effect by December. Deputy Treasury Secretary Wale Adeyemo says the cap will be imposed alongside EU restrictions on insurance for oil. Supporters argue that a cap would deprive Moscow of much-needed revenue. It also would keep prices from soaring when the insurance ban takes effect. China has fined ride-hailing giant Didi Global more than $1.2 billion. That wraps up a year-long investigation that symbolized Beijing's tough campaign to rein in its powerful internet industry. Last year, Didi pushed ahead with an IPO in the U.S. against the government's wishes. And the fallout from a series of defaults in the cryptocurrency industry is spreading. A crypto exchange that operates in Singapore and Thailand, ZipMex, has halted withdrawals. It's just the latest platform to succumb to financial difficulties stemming from exposure to Celsius. We'll have more coming up next. This is Bloomberg.
nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modelizaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition, and here's what you need to know. Mario Draghi calls it quits. Italy's Prime Minister resigns in a move that will add to the country's political chaos and stoke economic uncertainty across Europe. Meanwhile, Russia resumed gas flows to Europe via the Nord Stream pipeline, providing some relief for a continent that was bracing for a complete halt of supplies. The European Central Bank gets off the sidelines in the fight against inflation. The ECB is about to raise interest rates for the first time in 11 years. It may even deviate from guidance by considering an increase of double the planned quarter point. And Tesla CEO Elon Musk sees an end to what he calls supply chain hell. Musk says the electric car maker could have a record second half of the year. Tesla maintained its plans to increase vehicle deliveries by 50% annually over the next few years. I'm Tom McKenzie in London with Matt Miller and Kayleigh Lyons in New York. Anna Edwards is off today. Matt, you're checking on the markets as we, of course, assess the political implications of the fallout from Italy.
Absolutely, and there is a lot in terms of market implications in Europe. Of course, here in the U.S., no one really cares that much in terms of how it affects S&P futures. We're still down about 0.25%. We're still interested, obviously, in what's going on in Italy, but after 67 governments in 75 years, I think we're used to it, and we don't have the spreads here. The U.S. 10-year is up about 2 basis points, 3.0452 right now. So it looks like this rise in rates maybe supports a little bit of a sell-off in stocks, and especially since we've had such a good week on the S&P. NYMEX crude down 385 a barrel to 96.03 for Texas Intermediate, so a little bit of relief there as well. Maybe that works in the opposite direction. And Bitcoin is very positively correlated. That's why we see it down 1 1/3%, but still at almost $23,000. So Bitcoin has been holding at a relatively high level this week as well. Kayleigh, what do you see in terms of pre-market movers?
Well, Matt, I wonder how much of that Bitcoin move has to do with it just being a broader risk-off sentiment today, and how much it has to do with news that Tesla sold most of its Bitcoin stake, about 75% of it, which brought in about $900-something million of cash for the company. And of course, we got that news in the context of its wider earnings report. It did beat profit expectations. It's working through those issues in China and the supply chain. Elon Musk saying in his own words, supply chain hell hopefully is almost over. Tesla is up about 2.5%. There's some other earnings news out there, though, that's not so good. United missing its expectations on profit. It's pulling back on capacity in 2023. That stock is down 6.4%, while Carnival Cruise Lines is down more than 10% after announcing a $1 billion stock offering. And finally, we continue to monitor the hiring freezing or outright firing story out there, specifically when it comes to technology. Microsoft, the latest to say it is pulling back on jobs in its Azure cloud unit as well as its software security business. That hiring freeze going to last potentially for quite a while. That stock down about 0.8% before the bell, Tom.
Okay, Kelly, as we've been discussing, of course, it's very much a political story, a macro story as well, with the ECB coming up later in the next few hours with their decision, whether they go to 25 basis points as flagged or 50 basis points. But Italy as well, of course, with the resignation of the Italian Prime Minister. And you're seeing pressure across Italian equities, down 2%. Stocks, particularly around the banking sector, under pressure in light of the political uncertainty, whether indeed we move to elections and how any next government could form, what it means for that funding from the EU. Across the benchmark, you're seeing losses of 0.2% here in Europe. Euro-dollar as well remains in focus for us. Not a lot of movement at this point. Standard Chartered says if you get 50 basis points from the ECB, you could see a 2% move in the single currency. And of course, BTP's 353, a move of 14 basis points on the debt, selling off in Italy again, linking to that political rancor. And we're going to get more analysis now. Let's get back to what is happening in Italy, where Prime Minister Mario Draghi has, of course, resigned. Bloomberg's Francine Lacqua joins us from Rome. Francine, where then does this leave Italy?
Well, first of all, Tom, I have some beef with Matt because he says the Americans don't care. I know the American markets maybe don't care too much about what happens in Italy, but Matt, I walk in Rome and literally every second person is a tourist and they're all Americans. So let me tell you, if this country goes into meltdown, watch out for tourism. Now, the impact, of course, this has on the economy or where we are is Mario Draghi leaves. Okay, what happens next? A snap election. What does that mean? Who could come into power? And what that means for the relationship between Italy and Europe, Italy and the ECB is really very much up in the air. And so that's what we're trying to figure out. And that's really reflected on the angst that we're seeing in the markets right now.
I live in Westchester, so I'm surrounded by Italians. We care, of course. I'm just saying it doesn't hit the markets as hard as it hits Italy. You know, what I find interesting, Francine, is you're still fighting for $200 billion in support from the EU, right? That's COVID aid. Yeah. Are you getting that? Have you gotten it? Do you have to pay it back if Draghi leaves? What's the story?
Yeah. Yeah, so this is the EU Recovery Fund, and this is crucial, Matt. 100% is the one thing that investors are most worried about. Now, there's a second, or not a second, but there's a tranche. So this is a payment, a packet of that money. It's 22 billion euros, and it should be given to Italy in December. But again, this is a tit for tat, right? This is the EU saying, look, we have this mechanism. You access 22 billion euros if you do this, this, and this. And the priorities are reform, structural reforms, pension, and things like that. And this was the plan that Mario Draghi was adopting. So now this is up in the air, but then we spoke to politicians right here on this melting rooftop, and they said, look, it would be pretty stupid for anyone who comes into power not to stick that reform, not to stick with those plans, because they need that money so desperately. So, you know, we'll see what they'll campaign on. And then the other question is, of course, whether this is a big win for Vladimir Putin, because the coalitions and the parties that actually got out of government are more pro-Putin than others.
All right, Francine, thanks so much. It's been fantastic watching your coverage from Rome. Great respite from like Liz Truss versus Rishi Sunak in the UK. Let's turn back to what's going on in the energy crisis, which, you know, honestly is at the heart of the market problems in Europe. Russia resumed gas flows to Europe via the Nord Stream pipeline, providing some relief for a continent that was bracing for a complete halt of supplies. Joining us now is Michael Stoppard, S&P Global Chief Strategist for Global Gas. So we have confirmation, I think now, Michael, that 40% of the flows have been restored. But of course, you can never be too sure that Putin won't just turn it off if he feels it necessary.
Well, I think that's absolutely right. Prices are still at stratospheric levels. They've only come down slightly on the news, and I think that's telling you that the market just interprets this as a temporary reprieve.
Okay, so if it's temporary, obviously Europe wants to make some plans in case the gas does shut off. We heard Ursula von der Leyen saying yesterday that she thinks it is likely, maybe if not today, it could happen at some point. So the European Union is proposing cutting natural gas consumption by 15%, trying to address the situation from the demand side. But Michael, is that enough of a cut to make up for the absence they're going to feel?
So first of all, the European Union, I think, is hoping for the best, but planning for the worst case scenario. I think that's the idea. And I think what they're proposing is what I would call preemptive cuts. Rather than wait for winter, they're proposing that we conserve more gas in the summer period in order to build those storage levels as much as possible. And yes, actually, I think 15% is actually rather more than that's required. We do need to make some conservation savings, but 15% should be more than ample. And at current flows, we would expect the storage target by November actually to be met and exceeded. But of course, the key caveat there is at current flow rates.
Right, and there's a question of whether they will continue at all, if only at that rate. As far as infrastructure, we've talked a lot about whether Europe has adequate capacity to intake things like LNG from the United States, for example. I mean, those take a lot longer to come to fruition. And I'm just wondering, from an infrastructure perspective, longer term, if we do see a cutoff of Russian gas, it's not just going to be about winter 2023. You got to figure that out in the longer term.
Yeah, in the energy industry, we talk about the law of long lead times. And that means it takes 4 to 5 years to build a new LNG project normally. So long-term planning is required. But one of the surprises of this crisis has been actually how much LNG has been available for the European market. There have been huge increases in LNG flows. And what we're actually seeing at today's stratospheric prices is a complete choking off of LNG demand in a lot of emerging markets in Asia. Places like Pakistan and Bangladesh have been really forced out of the spot market, and that has freed up more LNG to come to Europe. But you're absolutely right that to build the next level of capacity is a long haul. We need 4 or 5 years at least for the market to adjust.
Michael, where does that leave your views? I mean, it's complicated. It's a clearly very complicated picture. But in terms of your views on pricing, a little bit of softness, as we said, down about 4% in today's session. In terms of European gas prices, does that softness continue as you look out towards the end of the year? What are you looking at in terms of key pricing levels?
I mean, prices have softened from yesterday, but from a historical point of view, we would not describe these prices as soft. We are at 5 times normal historical levels. And I think these prices that are abnormal by historical terms will continue for at least the next 2 years, precisely because it will take so much time to bring on new capacity into the global gas market.
And which sectors of the economy are most vulnerable to that then?
Well, there's a big to and fro going on about that. Householders are defined as protected customers. So supply to households should be the last thing to be cut, which puts more focus and pressure on the industrial sector. But the German industrials are pointing out the importance and the essential nature of many of their products, and are pointing out that consumers should make efforts to conserve energy as well. So I think all sectors will need to tighten their belt and be more gas and energy conserving more gas and energy. But households will ultimately be protected.
Michael, in terms of limiting future dependency on Russia, how is the building of LNG terminals going to accept gas from other suppliers?
We've seen a flurry of contracting activity, which will underwrite the financing of new LNG projects. But it's been noticeable that it's been overwhelmingly with the United States. So all bets really on the United States for another major supply build to come on in the latter half of the decade. And we have seen some investment decisions being made in the last month on 2 major projects, and we do expect more, but very much a focus on the US.
And the other, I mean, the competitors, for example, in Germany, obviously they have a lot of lignite coal, but they're also, I mean, obviously they're trying to get away from that. They're also still planning on turning off the nuclear, the remaining nuclear plants that are in operation, right?
I would be really surprised to see any significant turnaround in that policy. First of all, because I think that's strongly entrenched in German thinking, but also because it's some way down the road and you can't just flick a switch and suddenly decide to change course. So I wouldn't expect a major change in nuclear. And also on the coal side, this really is a temporary stopgap. Yes, we are burning more coal. We will be burning more coal in power stations. Yes, that's bad for emissions, but it's not as if we're starting up new coal mines with a 20, 30-year life. That's not happening.
Okay, Michael Stoppard, S&P Global Chief Strategist for Global Gas, on the evolving nature of the energy structure here in Europe as we adjust, of course, to those volatile flows from Russia. Now, stay with Bloomberg for our coverage of the ECB policy decision. Of course, gas has an implication there, an impact there. And the news conference, that all starts at 8 a.m. in New York. That's 1 p.m. in London. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Tom McKenzie in London. Anna Edwards is off today. And what a day it is, guys. It is an incredibly news-packed Thursday, all of it really centering around Europe because, of course, we get the ECB decision coming up at 8:15 a.m. Eastern Time, and the amount of different economic and political events that they need to be taking into consideration today is staggering. The resignation of Mario Draghi in Italy, which is blowing out the BTP Bund spread at the same time that you have gas flowing once again through Nord Stream 1, Matt. The question is for how long it will do so, and if it does eventually stop flowing, that puts Europe in a difficult economic position as the ECB's talking about raising rates.
Yeah, absolutely. And we got, don't forget, a big red headline that Tom highlighted at the top of the show. Russia now plans to hold annexation elections September 15th in the parts of Ukraine that it occupies. So this could signal the beginning of the end of the war. I think we all hope for that to cease there. And you've got Liz Truss and Rishi Sunak battling to take over as leaders of the Conservative Party. And Liz Truss seems to be the front runner there. So there's so much going on, and you're right, it all centers around Italy. Tom, you'd expect market turmoil as well, but you don't really see it beyond the Bund BTP spread blowout because you've had a recovery a little bit in the price of gas, right?
Yeah, you're seeing a spread now of about 224 on the BTPs 10-year versus the German Bunds. Of course, equities in Italy under pressure, down, what, about 1.8%. So pairing some of the heavier losses, it's the banking sector that's feeling the squeeze. But yeah, you did have at the start of the session, of course, the news that Nord Stream 1 was back online with 40% of volumes. But as we've been discussing, and as you mentioned, there is all that uncertainty over just what Vladimir Putin is planning and whether or not he's going to see what's happening in Italy as a success. As Francine was mentioning, there are divergent views in Italy about how far to go in supporting Ukraine.
Yeah, well, let's talk more about Italy now, Tom, and the political situation there. Vincenza Belfiore, wealth manager at Azimut, joins us now. Vincenza, can you just give us your reaction to the resignation of Mario Draghi this morning and what the economic and financial consequences going to be for Italy before we talk about broader Europe?
Hi, everybody. Yes, for Italy and to a lesser extent for Europe, the fall of Draghi is a negative element. I think that you could agree. Draghi is a figure of great charisma and is aligned with the pro-European project and represents a sort of a guarantee that Italy had towards to the rest of Europe. Being the head of the ECB also allowed him to create a network of contacts of international figures that facilitated his work. Based on today's projection, in the event of early elections, it is likely that we will have a populist leader instead of a pro-European leader like Draghi. And this can be a problem, both to unblock PNR tranche and on the financial side, a price risk with a growing yield.
In terms, Vincenza, can I just ask? Can I just ask in terms of, so typically Italy does not hold elections in the late summer, early fall because of putting together a budget that's necessary by law, I think in October or so for the EU. Is that process endangered right now?
Yes, I think that it could be dangerous. If Draghi has resigned, he can manage the current administration, which does not include the financial one. That is the main topic. We will have the election. We could have the elections after 70 days, and that would be at the beginning of October, and it will be very, very difficult to have the approval of the budget by the end of the year, and that could be a problem.
Okay, Vincenza Belfiore of Azimut, thank you. As we look ahead to the potential elections then in Italy after the resignation of Mario Draghi, maybe a populist leader and the challenges around putting a budget together in October. This is Bloomberg.
Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet. because it is the only Indian operator of Boeing 737 MAX planes currently.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Tom McKenzie out of London. Tom Keene, co-anchor of Bloomberg Surveillance, joins us now to talk about, Tom, something we haven't been hearing that much about in recent years, but this quarter, a lot more people are focused on nominal GDP.
Nominal GDP is top-line GDP. It's the real GDP that we're all addicted to in a time of no inflation, plus the real GDP plus the inflation component, which of course now is big, big, big. Looking at nominal GDP in US dollars for the pivot point of Europe, Germany as compared to Italy back to 2007 is an extraordinary chart and speaks to the value of Mario Draghi. I can't say enough about this chart. It shows a 30% differential going out, 13, 14, 15 years, and it's just simple. Germany has done what it's done. It's moved up nicely, and Italy, Matt, is flatlined.
All right, very interesting stuff, and of course we're focused on it here as well. Nominal GDP, Tom, in the U.S., 10%, so strong at a time when real GDP may have contracted for 2 quarters in a row.
Well, those are the partial differentials, and that real GDP is dynamic, and right now it's pretty miserable, to be honest. You know, it's a generalization. But what is inflation going to do, and what does that mean for the animal spirit that corporations deal with and such? And this is a raging debate into earnings season, is what will the guidance be given an ample nominal GDP? That's a question, Matt, I don't know, we haven't asked in 10, 15, even 20 years.
All right, Tom, today's one of those days when I wish I was on surveillance with you, not just because you have Max Kettner, but also because ECB decision day is when John Farrell really shines. Tom Keene, thanks very much. Let's take a look at what else we're watching. I am focused on ECB. I will be watching the Farrow Lines Keene coverage today of this decision because, Tom McKenzie, it's really a coin toss between 25 basis points or 50 basis points. Now there's something for the first time in 11 years really on the line.
Yeah, remarkable, isn't it? Do they front load 50 basis points? That would be a big call from the ECB, or do they stick with that guidance of 25 basis points? I'm focused on what's happening in China, the property crisis. It continues to evolve. Look, China Beige Book says this isn't systemic, but it's going to be a hit to growth. You've got $69 billion worth of property, which has halted in terms of the construction, and you've seen essentially a mortgage payment strike. That is remarkable, never been seen in China. That is a problem for policymakers there and a potential significant hit to growth.
All right, very fascinating stuff there. The Chinese perspective added into the total focus on Europe that we've got. That's it for early edition. But don't worry, Bloomberg Surveillance, the original, is up next. Tom Keene, John Farrow, and Kayleigh Lines taking you through the next 3 hours, along with an ECB decision. Max Kettner will join them, as well as Ed Morris from Citi. This is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
The story continues that inflation is a problem, and it's going to stay a problem.
The Fed's not done raising rates, and I think we can't be too optimistic at the market level.
We could very easily get another negative GDP print for the second quarter of this year.
The doom and gloom on recession is a little bit exaggerated at the moment.
It's a really difficult situation for the Bank of England and the ECB too.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Hello, Europe, from New York City, for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio, alongside Tom Keene. I'm Jonathan Farrow, together with Katie Lyons. Bramo back with us next week. Futures negative, 0.1%. TK, it was July 7th, 2011. It was the last time the ECB hiked rates.
They really don't like to do it. It's got a lot to do with the state of their experiment, also the state of their nominal GDP. We'll spend a lot of time on today. John, do you like my bow tie? I wore my EU bow tie for Madame Lagarde.
Very cool.
I did it. For those of you on radio, it's a beautiful light blue, as we'll see at 8:45 this morning. John, this is exciting. I believe you've got a nodding acquaintance with Italy, and you've been on the lawn in Frankfurt. What are your thoughts?
What a difficult moment for this ECB, Tom. It's not about the interest rate hike today. It's about the length of the hiking cycle for many people in this market. Will it be 25 or 50? Beyond that, how much further can they go? In Italy, Mario Draghi resigns, Tom. They need to unlock some aid out of Europe. To do that, they need to deliver some reforms. There's a lot of work to do in Italy. There's not going to be much work getting done without a government.
There's this concept of front-loading, and are we front-loading political chaos, political turmoil? You've got Truss, Sunak in the United Kingdom, you've got Draghi, you've got some autocracies in Eastern Europe, a modest issue of a war. This is as political as it is economic this morning.
Can we put a lid on the Italian bond market? Can we come up with that anti-fragmentation tool? Can we do that, Tom, today? Can they unveil the details of that today?
If we did not have the distractions, John, could they do anti-fragmentation? I don't get it. I've yet to see an essay on it that shows how it works. The applied theory of it, to me, is a mystery.
Yields up today. Is that unwarranted, Tom? Is that an unwarranted breakout of Italian yields today? That's something they've got to deliver. They can come up with a mechanism. The ECB has done this. They have a history of it. They can come up with a tool. What we don't know yet is the conditionality around that tool and delivering what is and what is not an unwarranted breakout of, say, peripheral yields. And we need to find out that out today, potentially, Tom, and maybe we'll have to wait.
John, I've done a lot of research on this. In the early morning, with the light filtering through the Metropole's bar in Venice, I'll wander in there when it's an empty bar and read the Italian papers and understand that I don't understand what's going on in Italy. It's its own unique experiment. And, you know, I just showed the nominal GDP chart with Matt Miller, and Draghi's all they had. I love what Citi said today. Giannakis over at Citi said about Mario Draghi. He's an experienced and influential figure. How do you replace that, John?
Do you want the tweet of the morning, Tom? It came from Karthik Sankaran out on Twitter, and it said this: asking for an ECB backstop after you bailed on a prime minister who was the ECB president, who invented the ECB backstop, would have a very strong vibe of "Mum, Dad, I've run away, send money." And Tom, that seems to be the takeaway some people this morning. I thought that might resonate with you.
Yeah, let me look here on the phone and see if anybody's catching up with Draghi.
Bit of good news out there, though. Kelly Lines, Nord Stream 1 back online, reduced capacity, yes, but relative to what some people expected, a little bit of good news.
Yeah, the gas is flowing. It's flowing at 40%, but that's better than an outright shutoff, which is what Europe has been bracing for. It seems that European officials have been bracing for the worst, trying to take preemptive action to reduce gas supply. So the gas is flowing for now, but we know that there's conditions around it. We know that it's a volatile situation. That gas could still shut off at any time. Russia is the one that holds the power right now.
These are tough times, and we'll be on top of the story in Europe throughout the whole of this morning. Kelly will guide you through the day ahead in just a moment. I'm going to guide you through the markets briefly. Down 0.1% on the S&P 500, on the Nasdaq 100, positive 0.1%. Yields higher by, 15 basis points? In Italy, call it 17 on a 10-year. On a 10-year in America, your Treasury yield higher by 1 or 2 basis points. No drama here stateside. 3.04% is your yield on a 10-year. Euro dollar totally unchanged going into this, Kelly Lines. 101.81, dead flat a few hours away.
Flat and not quite at parity yet, but of course we're still looking at a euro that is right around its weakest level going back 2 decades, and that is something that this ECB has to contend with when they make that decision at 8:15 a.m. Eastern time. It's not just going to be about the first rate hike since 2011. We think it's going to be 25 basis points. They told us it was going to be 25 basis points. Then reporting earlier this week indicated that maybe 50 was in consideration, but that may even matter less than that anti-fragmentation tool or the transmission protection mechanism, which we know it's called. We just don't know what it looks like. And when you have spreads between Italian yields and German yields blowing out to around 230 basis points today on the back of the resignation of Mario Draghi, I wouldn't want to be Christine Lagarde in this press conference. And of course, that press conference starts at 8:45 a.m. Eastern time, 30 minutes after we get the decision. In between that, we'll get initial jobless claims here in the U.S., and we're going to have to try hard to pay attention to that given everything else that's going on. 240,000 is what is expected, but of course, we've been seeing an uptrend since April. So what kind of cooling in the labor market does that signal? And finally, after the bell, we'll be getting more earnings. It'll be Snap, and this could be really interesting. Because remember back in May, Snap cut its forecast because they said, given the economic trajectory, given the weakness they are seeing, advertisers are pulling back. So what does ad revenue look like? That could be a real signal for Meta, for Alphabet, for example. For Snap, down 67% on a year-to-date basis. Could that outlook make things better or worse, John?
Big week coming up for Big Tech, Kelly. Thank you. Joining us now is Max Kettner, Chief Multi-Asset Strategist at HSBC. Max, read your note from a couple of hours ago. Getting There was the title. And Max, for anyone familiar with your notes, they know that you haven't been constructive at all. You've been bearish through most of this year. Max, are you getting less bearish as these months go on?
Not quite yet, right? We're getting there, as the title said. I guess, you know, when we look at positioning overall, we are getting the first indications that really aggregate positioning is a little less neutral and a little bit more convincingly bearish. So what we are seeing is that sort of aggregate real money positioning has shifted towards a bit more pessimistic stance. And that is generally good because that sort of means that the recession, the recessionary talk, the doom and gloom scenarios are becoming a bit more consensus. That is generally good. The bad thing, and why we're still risk off, why we're still saying so significantly underweight in equities and in high yield credit, is because the fundamental picture hasn't really brightened up. In fact, what we are seeing is that the fundamental picture and the fundamental headwinds have broadened out. So we're not only seeing that now in manufacturing or in industrials, we're seeing a bit more weakness now, cracks in consumers, in the housing market, right? And that is, that sort of fundamental headwind that is trumping the positioning at the moment.
Max, if we extend inflation and if we extend nominal GDP into a better nominal revenue, how does that change your multi-asset strategy to have a better money illusion?
Yeah, I guess, we need a couple of things, right? We need on the earnings side, we need a couple of earnings revisions down, particularly on the cyclical side of things. Now, you mentioned the nominal, and that is, I think, why particularly some of the earnings estimates have actually held up pretty well year to date, because at the end of the day, it's a nominal number, right? It's not a real number. We've just heard in the beginning that, yeah, there might be 2 consecutive quarters of real GDP contraction in the US, so technically a recession. But an equity guy, right? An equity guy says, well, you know what? I was expecting 9% earnings growth. At the beginning of the year, I thought most of that would come from real earnings growth. Now, we've been wrong on that, but actually most of that will come from inflation. But my nominal number will still be unchanged. So do I have to care that much? You don't until margins start to contract, because then the margin contraction and the fact that you don't have that much pricing power anymore, the fact that weaker top-down leading indicators are feeding through into lower aggregate demand, that then will call your earnings estimates into question. And I think that's the trajectory that we're getting into now, and that's why you're starting to see cyclical earnings revisions really starting to be downgraded a bit more than the defensive ones.
Okay, so if the days of margin expansion are over, Max, where is the safe place to be?
I guess, at the moment, it's still in sovereigns. I do like really developed market sovereigns, so the likes of treasuries, gilts. We do like gilts and bunds the most, because that's where, you are seeing both fundamental headwinds. So you are really already seeing sort of the data, both hard and soft, turning around. And at the same time, you've got very sort of front-loaded hikes being priced in. That, to me, looks quite attractive. Where's the place to hide out in equities? I do think that is more in the growth side of things. We've seen rates volatility calm down a little bit. So overall in equities, we actually do prefer US equities to ex-US equities. So to the likes of the Eurozone, to the UK, to Japanese equities, to the more cyclical markets, because those should be suffering once we do get more and more cyclical earnings revisions to the downside. And in fact, we do like emerging markets, both on the bond side and on the equity side. On the bond side, when we look at spreads are much, much, much higher compared to where they were in 2014-15 in that mini recession. When we look at, for example, EM high yield versus IG spreads, look at that for dollar high yield versus IG. That is 40% below that peak from that mini recession, very much in contrast to EM. And on top of that, in EM equities, we're starting to see really definitive signs of China's credit cycle really bottoming out. And that should be good for emerging market assets towards really the end of Q3, beginning Q4 at the very latest.
Hey, Max, awesome to catch up. Max Kettner there of HSBC. What a week we got coming up. What a day we got coming up for you. The ECB a little bit later this morning. We'll talk about Italian politics with Francine Lacqua in just a moment. On to next week. Got a big week for big tech and a Federal Reserve decision in the mix as well. Katie, just going through some of the companies that have had to slow hiring. We've got Apple, Amazon, Google, Lyft, Meta, Microsoft, Netflix, Peloton, Robinhood, Tesla, Twitter. Am I missing any? How long is that list now?
The list is long and growing longer. It seems we get a new announcement of slowing hiring or even outright layoffs every day. Even these huge cash flow heavy technology companies are looking at the macroeconomic environment and saying, hey, we should slow things down. What kind of signal more broadly does that send about the U.S. economy?
Isn't that the objective of this Fed, Tom, to get rid of job openings? Isn't this what they want to see?
We've never seen this. It's absolutely original playbook, and I do not think it will play politically well, period.
Futures, negative 0.05% on the S&P. The euro just showing a little bit of strength. Euro dollar 101.88. We're positive 0.1% on that currency pair. From New York City, looking over to Europe for most of this morning. Francine from Rome, coming up next.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Russia has resumed sending gas through its biggest pipeline to Europe after a 10-day maintenance period. EU officials were worried that the pipeline would stay out of service longer in retaliation for the EU's opposition to the Russian invasion of Ukraine. Russia's been curbing gas shipments to Europe for months, but the continent still relies on the little it's getting. The European Central Bank is set to join peers around the world in confronting inflation after months of standing on the sidelines. The ECB is expected today to raise interest rates for the first time in 11 years. It may even deviate from guidance by considering an increase of double the planned quarter point. Meanwhile, the Bank of Japan continues to go against the grain by leaving its rock-bottom interest rates unchanged. The central bank appears to be extremely wary of moving too quickly to boost rates and hitting the economy as it has done in the past. It now sees inflation averaging 2.3% for the current fiscal year. That's the first time the BOJ's expected price gains above its 2% target. And in the UK, 175,000 grassroots members of the Conservative Party will decide whether Rishi Sunak or Liz Truss will be the country's next Prime Minister. The former Chancellor of the Exchequer and the Foreign Secretary survived 5 rounds of voting amongst Conservative members of Parliament. The winner will be announced September the 5th. Microsoft, Google and Lyft are amongst the latest tech companies to hit the brakes on hiring. Microsoft says it is eliminating many job openings. Google is pausing hiring for the next 2 weeks, and Lyft is shutting down a division and will cut some jobs. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its 2 biggest billionaires.
earnings season is here.
Buzzwords this earnings season: recession, inflation, foreign exchange, layoffs.
We are starting to see, well, the world get a little bit more cautious about what these earnings are going to look like.
Bloomberg breaks the numbers first.
Second quarter earnings at Delta Airlines missed expectations.
When that inflation print hit, my eyes were on Amazon in particular.
With exclusive expert analysis.
The issue here really is elevated costs.
If you take a look at the projections, that is the story.
Bloomberg Television and Radio, the fastest numbers and analysis you trust.
The responsibilities are very clear. We supported Draghi until the end, and we will try to keep fighting on Draghi's program in the electoral campaign and after the elections.
Prime Minister Mario Draghi resigns. That was Enrico Letta, the former Italian Prime Minister, speaking with Bloomberg's Francine Lacqua from New York City this morning. Good morning. Alongside Tom Keane, I'm Jonathan Ferro. Together today with Kenny Lyons. Francine will be joining us very shortly. Equity futures unchanged on the S&P 500. On the Nasdaq 100, up 0.2%. Yields higher by a couple of basis points, up 2 to 3.0471%. Crude pulls back. This one's slipping beneath the radar, but it's a sizable move. We're down 4.8% on WTI, $95 and about 13 cents. And just to round things out for you, Tom, euro dollar 101.87, positive 0.1%, the tiniest bit of euro strength going into that decision.
Yeah.
8:15 Eastern time.
Currencies are actually very nuanced here this morning, John. It's something to watch here with renminbi giving away. I believe we're going to do China later. The usual Turkish lira angst as well, but it's worth watching. Swiss franc, euro Swissy had a 0.98 on it moments ago. That's a big deal to see it below 0.99 as we go into this very important moment for Christine Lagarde in the ECB. It is war duty. Francine Lacqua is in Rome, buttressed not in a heat wave, but in the normal heat of the summer of Rome, made more complex by the collapse of the Draghi 10 years. She reports us now with a final report before she enters the cozy Hassler bar, favorite bar on the continent, for an Aperol Spritz here in a moment, which she has well earned. Francine, for Mario Draghi...
With air conditioning.
Yes. For Mario Draghi, what is next?
Well, we don't know what is next, but he'll probably be looking at Italian politics from afar. Now, it's very likely that he stays as caretaker, Tom. Now, this is a technocrat. There was no real legitimacy in him being in charge of the government. He's been in charge for 17 months, but actually it's something that a lot of Italians supported. But more than that, it's really something that the market supported, that investors supported, that the EU supported, because he brought stability. He brought the reforms needed to access the EU funds. Now, this was... we don't know whether it's a self-inflicted mess or actually the bickering political Martys that ended his government. One school of thought is that, look, we're going to go to elections in 8-9 months anyway. So the fact that they're in October, the fact that there are 3-4 months is not a huge deal. He's probably staying on as caretaker from a little bit. I would rule out the fact that he goes on a cruise ship with Boris Johnson, who's also out of a job. But maybe anything happens in this crazy world.
Francine, a delicate question, and I'll avoid the cruise. Tom might want to join them. I'm sure, Tom, you would like to join them. But Francine, does the European Commission fear Italian democracy?
I think the Commission actually fears that Italy does not continue with progress. So there's a question of whether Italy remains investable if they don't have access. Democracy is by going to elections, John. So it is a little bit of a loaded question, because the right thing to do, if you're in a fully functioning democracy, is going to elections, and then you see whatever coalition, no matter how frustrating, how bumpy it is, this is what the people wanted. But if you're the Commission and you're giving them 22 billion euros in December, you want something in exchange, and that's stability. You want reforms because this country needs to change. And so they're probably looking at the political chaos and wondering what to do with all that money that they should be giving out, as long as Italy stays on the reform path.
Well, a future coalition is going to need to be built, Francine, and obviously Five Star has some blame in the collapse of this government. Is their influence now going to wane as a result?
Yeah, so part of the problem, Kaylee, is that I think Five-Star Movement, again, the foreign minister was part of the Five-Star Movement and then broke away to do his own party, is that they're losing momentum. And so yesterday morning, Mr. Conte, the head of the Five-Star, the populist movement, probably felt that it was his last chance saloon to feel credible in the eyes of the electorate if he broke with the current government. But then really yesterday it was the Lega, the center-right, and it was other parties that dropped Mario Draghi in saying we cannot continue as long as we stay with the five-party. If we go to elections, or at least the latest polls suggest that if we went to elections tomorrow, it would be a right-wing coalition without the Five-Star Movement. But then there's a big unknown of Fratelli d'Italia, the Brothers of Italy. In the past, they've been quite Eurosceptic. It's unclear what tone they will strike ahead of an election, possibly September 25th or October 2nd.
I look, Francine, on and on and on the story goes. I think for our American listeners and viewers, they're aware of an Italy flat on its back, and yet they keep going, they keep going. Is that the assumption that they just stagger forward? Or as you mentioned moments ago, can there actually be some form of shift to a different government, a different political society?
Tom, we spoke to various politicians today, and they said this will be remembered in the history books because you're right, there's something like 56 or 60 governments in the last 70 years, depending on what you use as a starting point. But it was always governments that the markets, or at least authorities outside Italy, did not think it would be on a growth path. Here, and this is a view that's widely assumed by markets, maybe wrongly in certain parts, because again, he had no legitimacy. He was a technocratic prime minister, was a government that was putting Italy on a different path, a path of growth, a path of less waste, a path of cutting costs, a path of less, for example, some of the social workers, which bloat the government's efficiency. And so this rupture in time with a government that seemed to work for inside political reason, again, it's unclear how it plays out with the electorate, with the officials in Europe, both in Frankfurt at the ECB and, of course, in Brussels at the Commission.
Francine, no one better to cover this story. It's great to catch up with you this morning. Francine Lacqua out of Rome on the Italian political situation. No doubt Rome looking towards Frankfurt today as we count you down to the ECB decision a little bit later. And all of us, Tom, we've got to talk about Russian energy supply as well and the prospect of the Europeans pulling back on the use of gas going into winter. This is what the Spanish and Greeks and the Portuguese think about that. Javier Blas with some reporting earlier this morning, Tom. They are rejecting the EU call for a 15% cut in natural gas consumption to help Germany. The Spanish energy minister said this, Tom. Take a listen to this line. Contrary to other countries, Spain hasn't been living beyond its means in energy terms.
Well, okay, that's a separation. It's there and it's timeless, like the divide between Italy and Germany. That conversation with Francine John sounded out of the 19th century, frankly, to me. But what do you make also of the headline an hour ago on annexation of eastern Ukraine towards Russia? And this is the political soup that Lagarde has to step into. Again, I'm going to listen for fragmentation theory. I really question whether she'll deliver that. My guess is a delay.
The decision, 8:15. Eastern Time, the news conference, 8:45 with President Lagarde. A big morning coming up in Europe. Euro dollar, positive 0.1%, 101.93. From New York, this is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
A long list of tech companies coming out with decisions to postpone hiring, to cut job openings, maybe even to outright cut the workforce. Big week for big tech coming up next week. Futures unchanged right now on the S&P 500. On the Nasdaq 100, we are positive 0.2%. The main event is not this side of the Atlantic, it's on the other side. If you look to the Treasury market, things are pretty muted. 2s, 10s and 30s shaping up as follows. On a 10-year yield, we're up by a couple of basis points to 3.0452%. If you want to see a move in a 10-year, look to Italy. Let's check out the European board. The spread between Italy and Germany, wider today. You see the Italian 10-year up by 17 or 18 basis points. The spread between Italy and Germany right now, something like 230 basis points. Bear in mind the wides of the year, about 240 back in the middle of June. So we're not a million miles away right now, even if the highs of the 10-year are still a bit far away. The fact is the difference between German 10s and Italian 10 years have been widening off the back of what's happened with the Italian Prime Minister Mario Draghi. The Prime Minister no more. He resigned. So your 10-year in Italy, Tom, 357, and that just really complicates things for President Lagarde at 8:15 and again at 8:45 when that news conference starts.
It is an overlay, yeah, absolutely. It's a complication, but John, it was fascinating. You know, you make jokes about the Hassler Hotel at the top of the Spanish Steps, and Francine, wonderful to see her in Rome. It's out of the 19th century. What's exactly changed, John, since time began? I mean, it's the same old story, right?
Tom, you have to remember that in places like Italy, after the Second World War, they wanted to make decision-making that much more difficult because they did not want to have a concentration of power in a leader after Mussolini. You have to remember the history of all of this, and what that has done further down the road is complicate Italy's ability to deliver reforms. Tom, the nuanced view around the Italian political situation this morning ultimately is that if they don't get a government together, if they don't get to a position where they're able to deliver those reforms, they can't unlock that European aid. And that was what Francine was talking about this morning. For the euro dollar at 102, let's just sit there just for a moment on the euro, Tom. It's not about 25 or 50 today. It's about the length of the cycle. How long is this hiking cycle in Europe actually going to be? Can they deliver 100 basis points worth of rate hikes? 50 basis points worth of rate hikes? And Tom, let me ask you this. For all this talk about going 25 today and 50 again in September, where is Europe in September? Can you really make that call right now?
I can't, other than the GDP question is huge.
It's tremendously difficult given with the given what's happening with the gas situation out of Russia.
Folks, I have a tendency here to go back to GDP, and what I would say for American listeners and viewers right now, where you say, well, so what? Why does this matter to me? All of these decisions we're going to see in the 8 o'clock hour here in 90 minutes limit and constrain the degrees of freedom, and as Lagarde says, the optionality of what Jerome Powell can do. That's why we're leaning forward and focusing in on this today. Right now, and this is a really, really important conversation, Megan Green joins us from Kennedy. She's chief economist at Kroll Institute as well. And she has been thinking about this thing we're throwing around, fragmentation theory and such. Megan, I've seen 25 articles on this, and it all comes down to the mechanism or process that's going to be involved. What process will they do that will, in terms of the math, close the loop, complete the circle, so it's a legitimate fragmentation tool towards success?
Well, first of all, the tool is meant to bring down an unwarranted rise in spreads. And if you look at Italy right now, spreads are rising. I'm not sure that's unwarranted, though. So that's one test. But I think really the key to this is in obfuscation, unfortunately. I think the ECB, to pull this off, is going to have to wave their hands a lot. Say it's super complicated. We have all these algorithms. It's not just based on spreads, it's based on speed as well. And so in doing so, they have to keep a two-way bet for portfolio managers, which is on right now, but they need to maintain that. The problem is that the German Constitutional Court needs all the details. And so obfuscation won't really work. There's also a problem with the conditionality, because there is a tool already with conditionality that's unlimited in size, the OMT, and arguably the ECB might just say to Italy, you've got a tool, it's that. But the conditionality might actually be complying with the EU's fiscal rules or keeping up with targets for the next gen EU funds. And looking at Italy again, it's very unlikely Italy's going to be able to do that if it has an election in October.
Megan, what's so important to me, and I go to the great Roman Friedman at New York University, who owns a high ground on the mathematics, the fine mathematics of what's called a rehedge. If they institute a fragmentation program, they have to rehedge it or restructure it out there somewhere. How do they do that? How do you actually set a fragmentation tool the second, the third, the fourth time around down the time continuum?
Yeah, that's the trick, because the idea is investors are going to test this. Inevitably, they're going to try to figure out what the trigger points are, how much the intervention there is. And that's why it needs to be really complicated, so that investors can't work that out. Otherwise, they will constantly test it. I don't really see the ECB pulling this off. Also, you saw stories that actually they don't have all the details worked out, and that makes sense. They've only been working on this for a couple of weeks. But a soft launch of this anti-fragmentation tool isn't really going to work today, given what's going on in Italy, given the concerns about Russia turning gas off, although it does seem like Nord Stream 1 already has some gas moving through it again. So that's a tentatively good sign. But if Russia doesn't turn off the taps now, they still might going into the fall and winter.
And Megan, you mentioned OMT. OMT, of course, was never used. Do you get the sense that anything they come up with today, if they do come up with something today, that it will have to be used?
I think it will have to be used, unless, as I said, they manage to confuse everyone so that nobody bothers to test it because they can't quite work out how it works. So I really do think that the key here is in confusion and obfuscation. That's the ECB's most powerful tool with this. The problem, again, is that the German Constitutional Court is going to want the details. And so that makes, just sowing mass confusion pretty difficult, particularly over the medium term.
Well, Megan, the clue might be in the name, the transmission protection mechanism. Is there something about what happens on the periphery that you could say is impairing the transmission of monetary policy?
Yeah, so if you, because European funding is mainly bank driven rather than through the credit markets, if you look at lending conditions and loan demand in the periphery versus the core, there's already a divergence, and has been since the ECB announced it would wind down its QE program. And so in theory, then, if you have different credit conditions, different lending conditions in the core versus the periphery, that affects how monetary policy is transmitted through into the real economy. And it will be different in the periphery versus the core. So I do think that there is already a divergence. And as I mentioned at the beginning, it has to be a warranted intervention. So, the divergence there should be spreads, for example. The ECB can't reduce all of those altogether. And if you look at Italy, if you look at the Spanish economy, there are reasons why, lending conditions are different and there are spreads. And so the ECB doesn't want to get rid of all of that. That would just be introducing moral hazard. The Northern European countries would certainly be opposed to that. But they have to figure out some trigger for when there's an unwarranted divergence in lending conditions and spreads. And that's the trick. Nobody can actually really define that.
Well, Megan, clearly the anti-fragmentation tool is going to capture a lot of our focus today, which kind of overshadows that this is going to be the first hike from the ECB going back to 2011. And as John alluded to earlier, it's not necessarily just about the start of hiking today. It's how far they're going to be able to get, considering they're hiking into weakness. We were speaking with Jennifer McKeown of Capital Economics yesterday. She said 2%, to which I quickly responded, wait, what? And that's what she thought. What do you think?
I don't think there's any chance they get rates up to 2%. I think the markets have priced in around 1.7%, and I also think that's too high. I think if Russia wants to use this tool of cutting off gas, the most powerful time for it to do that is now, actually, given that Europe is trying to pivot away from Russia for energy. So I actually do think the taps will be turned down or turned off later this year, and that will cause factories to shut down. It's not just a pricing issue, it isn't an actual supply issue. I think that should push the Eurozone into recession. They might not technically go into recession until the beginning of next year, but I doubt that the ECB is going to be able to hike so aggressively into that.
Megan, I really wanted to squeeze this in because I think it's such an important development over the last few months, particularly this year. The relationship between the core and the periphery. There are certain southern European countries which are less reliant on Russian gas. Germany much more heavily so. Yeah. The Germans are effectively asking the southern Europeans to cut their consumption of gas to help Europe through a tough winter. Megan, you followed Greece and the forced austerity of the last decade or so and the difficulty that they went through. Do you sense that we might have some tension in reverse from the periphery back towards the core?
Yeah, certainly the Germans are asking for solidarity, and I think that the peripheral countries are probably thinking to themselves, well, solidarity, what happened to that during the Euro crisis? We didn't get a whole lot. All the adjustment was forced onto the peripheral countries. That being said, of course, Italy is highly reliant on Russia for energy as well, so it's not just a core versus periphery issue. It's Spain and Portugal, which have a bit more independence. But, you know, I hope that there is a focus on kind of a European response to this. That's certainly the case. You saw with the European Commission's recommendations that came out yesterday. But we could start to see cracks coming through as Germany asks for more solidarity. And some of these weaker economies remember that the adjustment was forced entirely on them during the Euro crisis. And so why should they be making an adjustment this time around to help the core? I think that will definitely be part of the dynamic.
There's a whole generation scarred by it. Megan, thank you. Megan Green of the Kroll Institute. Tom, Europe, very much front and center this morning.
I want to go back, John, to why it matters for Americans. I think we really got to sell this so people stay with us here in the 8 o'clock hour. This matters on degrees of freedom, the optionality that Jerome Powell has. It matters on trade, John, which is off the back end of the GDP equation. And frankly, John, it matters on consumption with the wall of tourism that we've had this year. We need a stable Europe for all sorts of reasons. Forget about the heat wave. That's a one-off. We need Europe to get its act together. That's what this is about today.
Katie and I have talked about it a few times over the last few weeks, the double hit that you get out of Europe from weaker earnings and a weaker euro as well. And Tom, can I tell you, I'll just echo something that Francine said earlier this morning. Going through Italy this summer, every second person, every second tourist, American accent. American accent.
Oh yeah. No question about it. I was told, I think it was Greg Fleming told me on Wall Street Week, you go to Paris and it's basically an American outpost because the Asians aren't there because of COVID.
Yep. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the First Word, I'm Ritika Gupta. The European Central Bank's on the verge of doing something it hasn't done in 11 years, raise interest rates. Policymakers may deviate from their guidance of a quarter-point hike and increase rates by twice that amount. Inflation in the Eurozone set a record last month. A Biden administration official predicts that a price cap on Russian oil should take effect by December. Deputy Treasury Secretary Wally Adeyemo says the cap will be imposed alongside EU restrictions on insurance for oil. Supporters argue that a cap would deprive Moscow of much-needed revenue. It also would keep prices from soaring when the insurance ban takes effect. Bloomberg has learned that the Kremlin is in a rush to hold referendums in Ukrainian territories occupied by its troops. That would give Vladimir Putin the grounds to absorb them into Russia as early as September. Annexation would signal Moscow's unwillingness to discuss giving up the territories in any future peace talks. And President Biden says he expects to speak with China's President Xi Jinping within the next 10 days. The administration is considering whether to lift some tariffs on Chinese imports in an attempt to ease inflation. At the same time, relations between the US and China have gotten worse over Beijing's refusal to condemn the Russian invasion of Ukraine. China has fined ride-hailing giant Didi Global more than $1.2 billion. That wraps up a year-long investigation that symbolized Beijing's tough campaign to rein in its powerful internet industry. Last year, Didi pushed ahead with an IPO in the US against the government's wishes. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Eurzone's case, we think that it will dip into a mild recession, partly related to the limits on gas supply and uncertainty around that. But nonetheless, I think the ECB is going to have to press ahead.
Jennifer Mickione there, the head of the Global Economic Service at Capital Economics, stopping us in our tracks yesterday, talking up the potential for the ECB to get to 2%. Megan Green just moments ago said no way. Futures right now, positive 0.16% into negative territory, rather, on the Nasdaq 100, positive 0.05%. Yields are just a little bit higher on a 10-year, 3.0359 on a 10-year Treasury, much higher on a 10-year in Italy, up by 13 basis points, but just off session highs going into this ECB decision at 8:15 Eastern Time. Euro dollar now unchanged at 101.84. I just want to finish here, Tom, because we can't let this one slide. Crude down 4.8%, a 95 handle now on WTI.
Second time down, I'll say, in the last number of days. You have to watch that, along with in the equity market, VIX 23.99 really shows the back and forth, John, that Max Kentner was talking about earlier, just the tug of war we've got here. You see it all over the screen today, and of course, so much of that uncertainty towards the U.S. 8 o'clock hour and what we hear from Frankfurt, Germany. Right now, we want to tie in the energy discussion and try to make common sense of that. We do that with Will Kennedy, our senior executive editor for energy and commodities. Will, as you know, there's Amsterdam, Antwerp, and Rotterdam coal. There was a number of years ago an outrage over something called Rotterdam Plus. We don't have time here to explain it. I don't understand it. But it has to do with the pricing of coal up 600%, up near 200% annualized over the last 2, 3, even 4 years. All of that coal discussion folds into gas and folds into oil, Brent crude as well. What is the persistency, what is the perception, I should say, of the persistency of high net gas prices in Europe right now?
Natural gas prices are going to stay elevated through the winter. No matter what happens with pipeline flows, there's going to be a considerable shortage of natural gas this winter. We just don't know how bad it's going to get. And that's going to keep gas prices elevated. That means power prices will be elevated. And as you say, Tom, that means that coal prices will be elevated because a lot of utilities across Europe are trying to turn on back on power plants that burn coal, and they're buying coal.
Would the price have gone up without the war in Ukraine?